heart of all AI, all right? The semiconductor index, if you buy the semiconductor index, which is the SMH, it's just like buying SanDisk. It's just like buying a bunch of the semiconductor companies, Micron. It's like buying all of those different companies, NVIDIA, that's in that particular space. So a lot of people, instead of buying, straight SanDisk, straight NVIDIA, straight Micron, they will buy this index. And if you were using the What Would Joel Do method, if you were using the What Would Joel Do method, look at what the Yellow Brick Road is doing. The Yellow Brick Road, hold on, let me move this out the way. All right, if you are looking at the Yellow Brick Road, you will notice that even if you were to go all the way back, here, look, you see everybody's buying it at the Yellow Brick Road. The Yellow Brick Road is real. The Yellow Brick Road is real, people. Look at those excellent buying opportunities at the lows. Man, imagine making this whole move on an options play. Jeez Louise. You see that? If you were able to buy the semiconductor index when it hit the Yellow Brick Road, not only did it go oversold, if you were using the relative strength index, I'm teaching you guys how to buy things at the lows. Look at this. You see the relative strength index went off. You see this blue area down here? This is the relative strength index. The relative strength index went off at the same time that it was hitting the 200-week moving average. If you were to do that, it's just like buying a house for $200,000 last April, and then being able to sell that same house 1 year later for $510,000. That's the type of move that we made. Imagine buying a house for 200 grand, and 1 year later, you sold that house for $510,000. That's the type of move that you got in the semiconductor space just by using the 200-week moving average. The 200-week moving average, the Yellow Brick Road, is a very powerful tool that investors use to try to catch the lows. All right? I'm just looking in the comment section. Oh, what's the ticker symbol? It's the SMH. The ticker symbol is the SMH. The SMH, the semiconductor ETF. All right, very powerful tool, guys. Very, very, very powerful tool. All right. But if you notice, we just broke a record. We broke a record for the amount of days that it was up in a row. We had gone up, guys, for 3 weeks and a day. All right, you see this move to the upside? We were up like 13 or 14 days, and it's overbought right now. So if you're trying to buy it here, don't buy it there, guys. We buy things on sale. If you want to buy the semiconductor index, all you got to do is learn how to draw a line like this, and then see if we can come back to this line. When you draw your trend line, if your trend line is about at 45 degrees, take out a protractor or a protractor, however, wherever you want to put the emphasis, protractor, protractor, whatever. Draw a 45-degree angle. When it gets down to this line, that might be an area you may want to buy. That looks like the 450 area, guys. The 450 area, if you want to buy this index, don't buy it way up there. It's going to give you a chance to get in. It's gonna give you a chance to get in. It always gives you a chance. Look, it always gives you a chance to get in, guys. You never see a straight line straight up in the air. It's gonna give you a chance to get in. The question is, when it gives you a chance to get in, like here, which was this was 2022. It didn't give you a chance to get in until 2025, and even when it started to make the move this time around, it's just not giving you a chance. Every now and then, the market will take a break, it'll take a breather, it'll let stocks like this that are hot, or indexes like this that are hot, they're gonna come in, and then you guys can, you can try to buy. All right, hold on. Let me cut this down just a little bit. All right, so let's look and see what was happening with the market today. Uh-oh, that's not what we wanted to see. All right, there we go. All right, so let's talk about today. The story of the day was the chip index explosion. The SMH, or guys, you can buy the SOX. The SMH or the SOX. But let's talk about the story of today. The semiconductor sector just went parabolic. This is not me talking. This is ChatGPT. The semiconductor sector just went parabolic. The Philadelphia Semiconductor Index, which is the SOX, ripped 47% in 18 days. One of the craziest runs in history. ETFs like the SMH and the SOX surged 30 to 40% in just weeks. What is powering this move? AI data center demand. Chip shortages turning into pricing power. That's why companies like SanDisk are going through the roof. Massive capex from big tech. But today we saw a pause, guys. Today we actually didn't go up after an 18-day winning streak. 18 days. The chips cooled slightly. All right, analysts are now warning valuations are stretched. This is still a bull run, but now it's volatile and explosive. NVIDIA, guys, was up 4% today. The largest company on the planet that hit a $5 trillion market cap rose 4%, and it squeezed anybody that wanted to short it. Anybody that was mad and angry and said NVIDIA's too high, you got your butts ran over today. That's why you should never bet against the best companies on the planet. You're not that good. You're not that good, guys. NVIDIA is the largest company on the planet for a reason. Stop trying to short it. Stop it. I don't know why you guys are masochists. Y'all just love losing money. You want to short the best companies on the planet. Go short some terrible companies. Stop trying to short the best company on the planet. Why did Micron and SanDisk go crazy? Micron was up 5%. SanDisk was up 8%. Analysts issued bullish upgrades. Jeez Louise. Memory chips, core to AI infrastructure. Investors are rotating into cheaper AI plays. All right. My new play. What did I buy today? Everybody knows that I bought Oklo today. Where were you when I told everybody I'm buying Oklo today at 9:30? I don't care what the price is. I need to get my butt in. And I got my butt in. I'm in Oklo. I didn't have any type of energy plays in my portfolio. So when you look at these receipt towers, not a single stock that I owned or energy. So I was like, guys, I need to get a little bit diversification into other speculative companies. I was too AI, too data center, too tech heavy. So I'm trying to diversify. So I took my Costco earnings, the money that I made from Costco, because Costco is really not doing anything right now. I sold off some of my Costco play, and it funded my Oklo investment. Okay? So I started buying Oklo today. Oklo is involved in nuclear reactors. Hold on. Let me see if I can make this bigger. Let me try something. All right, maybe that's a little bit better. Is that bigger? So that you guys can see it. Still looks the same. Actually, it was better last time. All right, let's just keep it like this. All right, we tried a Poet Technologies this morning. We tried to buy it. We tried to buy puts on Poet, and it dropped. And a couple of times it tried to go up the put tried to go up in price, and it finally started to pay off. I think if you were able to catch it at the lows, you were able to catch maybe a 50 or 60%. I know I'm like you were able to catch a measly 50%. Yeah, you could have caught 50 or 80% in the options market, but we were looking for 100 to 500% return in one day. One of the reasons is because one of their biggest, I thought that ChatGPT would catch it, but one of their biggest clients decided to not use them anymore. So the company was down 40-something% today. Also in the news, guys, Elon Musk is suing OpenAI. So if you don't know this, OpenAI is the creator of ChatGPT. Now, Elon Musk used to be with, was with them in the beginning when ChatGPT was created or OpenAI was created. Now, if you've ever, Elon has been terrible in the news these days. So it's really hard for people to kind of, research and see what he's about because of all of the negative stuff that he's been putting out, especially during the last election. But Elon has always been an individual that wanted to change the world. All right. So despite all the negative feedback, despite going on stage and throwing up the Nazi sign and saying that it wasn't the Nazi sign, before all of that, before Elon went bananas and crazy, Elon created companies to change the world. So, there's a big old 700-page book that's out there about Elon. I wish they did an autobiography. Is it autobiography? I wish they did what's it called? Basically, I wish they did a show where they covered his life and what he's been through his whole life. Because if you've been following his story, you will see that he's actually an interesting character. You don't have to like him or not like him, but he has Asperger's, which is why he's so the way that he is. But everything that he does is to change the world. So what most people don't know is that the first company that the first company on Wall Street that he was ever a part of, that he helped create, was PayPal. He sold PayPal and he became a multi-millionaire after selling PayPal. And then he started SpaceX back in 2002. A lot of people thought that he started Tesla first, made money from Tesla, and then started SpaceX. No, he started SpaceX in 2002. He funded a lot of it with his money that he made from PayPal, and he didn't care if he was going to lose all of his money, because everybody was like, why would you start this rocket company after making all of these millions of dollars? And Elon said, I don't care about the money. I want to change the world. All right. But what ended up happening was SpaceX now has like a $2 trillion market cap. It has a larger market cap than Tesla. So a lot of people don't know this about Elon. Elon also, when he developed, he took over Tesla. He didn't invent the Tesla vehicle. So anybody thinking that he was like, this rocket scientist that developed and created Tesla vehicles, he didn't. There were two other individuals that did that. And he ended up later taking over the company, becoming the CEO, and then driving the idea of electrification across the world. Then he opened up his patents. So I don't know if you guys noticed, but nobody could crack the code on how to develop a electric vehicle and be profitable from it. Elon opened up his patents. He could have easily said, no, I want to keep that patent and not allow anybody or any country to develop electric vehicles unless they did it on their own. And he was already 10, 15 years ahead of everybody. He opened up his patents because he knew that in order for Tesla to be successful, there had to be other competitors and there had to be other nations that were involved in electric vehicles as well. He also was part of the board that created XAI and OpenAI. When they first created OpenAI, his argument is that when they developed ChatGPT, or OpenAI, sorry about that, when they developed OpenAI, the goal that he thought was that it was going to be for humanity. Like, it shouldn't, it was for nonprofit. So then, all of a sudden, the other members of the board decided that no, we're gonna become profitable off of this company. And then Elon said, I don't believe in that. And then he left and created XAI. Now he's suing OpenAI for $168 billion because initially it was supposed to be a nonprofit. It was supposed to be for no profit, and of course, a lot of us pay $20 a month to use this particular app. So if they lose, guys, it's gonna put a huge dent in ChatGPT. And what's funny is that ChatGPT, or OpenAI, just signed a contract with the government to be their source, or to be their GPT that they use now that the government has fired Anthropic. So there's a lot of drama going on in the GPT space, with Elon being right there in the center. So, it is what it is. All right, but there are big tech earnings this week. We got Apple earnings this week, Amazon, Microsoft, Alphabet, and Meta. So today was boring, but starting tomorrow, guys, there should be some excitement in the market. In fact, any of these companies that have their earnings that are coming out that day, they're going to be the stocks that we will probably trade that day. for the Millionaire Challenge trade. All right. And we're going to look at Millionaire Challenge trades right around 8 o'clock. So what I'm going to start doing, guys, is I'm going to start looking at your investments and your swing trades from 6 to 8. And then from 8 to 8:30, I will talk to my intraday traders and my traders that are trying to make that quick money. So we'll do that at the end of the session at night, because it's only a small group of you guys that are interested in that. And, wealth is created through investing. So that's why we're going to spend most of our time looking at the different companies that are fundamentally good or bad. And then you can take it upon yourself if you decide that you want to trade or invest those companies in the future. All right. So basically, it's still all about data, data centers, AI, and semiconductor chips. If you're trading the market, that's where all the money is being traded. That's where all the money is flowing. In fact, guys, what did they say? 75% of VC funding went towards AI this past, I don't know if it was this past year, but it was a crazy number, 75% of funds. That means, 75 cents out of every dollar was invested in companies that were involved in AI. So if you can say it's a bubble, you can say it's not a bubble. I think we're in the beginning of something that can go on for about another decade, and then maybe we bubble after that. But until you're driving up the street and you see data centers up and down the highway, we ain't in a bubble yet. We are not in a bubble until you get sick of looking at data centers. Y'all ain't even seen a data center yet. So how can you have a bubble when you ain't even seen one yet? You ain't never been in one yet. It's a bubble. Ain't no data centers. How can we be in a bubble and we ain't even got them yet? The stock market always is a forward-looking thing. The stock market is forward-looking. The thing is, guys, is you guys are not used to being ahead of the crowd. You're just not used to it. Now, when we're talking about it, we talk about it so much it seems like old news. Believe me, people still don't know what data centers are. They don't know what semiconductor chips are. We do, because we talk about it every day for 3-4 hours. We are still ahead of the crowd. This is when you're supposed to invest in it. And then when they finally find out about it, we would have made 10 times our money by then. All right? You're just not used to being ahead of the crowd. I am. So if you see me buying, I'm used to being ahead of the crowd. Remember, I have a 3,000% return in NVIDIA, SoFi. All of that already got what, a 60-70% return in Arista Networks and CoreWeave. I'm used to being ahead of the crowd. Bitcoin, Netflix, that's what I do. All right. You guys are just now finally getting into the know. You're finally engaging with other people that are seeing the market, investing in the market, and then we're going to sell later. But you got to position yourselves now. All right. And you also got to learn how to look at charts. You got to learn how to read charts, guys. If you can't read charts, you're going to have a very hard time following us in this particular room. All right. Now, let's pull up charts. Y'all know I'm telling the truth. Y'all ain't, you ain't used to making money like this. You're just now learning about the yellow brick road. I've been using the yellow brick road for over a decade. You guys are finally getting into the know. All right, so make sure that you take this information, this free information, and you know what to do with it. All right. We let the market tell us what to do. We don't let Cousin Al and Reddit rooms and people like Michael Burry tell us what's about to happen in the market. The market can go bananas. They can put all their money in semiconductors. They can take Tesla to a quadrillion-dollar market cap. And it doesn't have to make sense. It doesn't have to make sense. Stop trying to use common sense to make money. It's not supposed to make sense. When I make a whole bunch of money, guys, it never makes sense. I'm like, this doesn't make any sense, but I will take the 3,000% return. NVIDIA 5 trillion doesn't make sense, but guess what? If you want to take it to a quadrillion, I'm going to be in it. Stop trying to use common sense to invest in the market. Because you're not going to understand it, because you're not supposed to understand it. These numbers are supposed to seem ridiculous, and they're going to get even more ridiculous and even more ridiculouser as we get older. We're going to look, one day you're going to go on Auto Trader, and when you do it, y'all are going to remember this guy right here. You're going to go on Auto Trader. You're going to be looking for a brand new vehicle, or just surfing it just to see how much things cost. You're going to see a brand new Honda Accord, fully loaded, going for $99,900. And you're going to say, hell to the no. $99,000 for a Honda Accord? Yep. Dang, I remember when this cat was talking. This cat said this was going to happen one day. And when it happened, I wasn't going to believe it, because I've already seen things get ridiculous. And I'm like, what? Are you kidding me right now? That's how, okay. Well, if you're not invested in anything that goes up in value, it's going to always seem crazy. So you better get into the things that go up stupid so that you can buy stupid things later. The average house is $570,000 now? The average house is $570,000? Now, people in New York and California and Florida, you're like, 500 grand? You can't even buy the landscaping for that. You can't even buy a garage for $500,000. I'm talking to people that aren't in New York, California, and Florida. Yeah. All right, so let's look at some of your stocks. So you got to be invested in these things. You got to start saying, I know it doesn't make sense, but I'm going to get in and I'm going to stay in until the trend ends. The trend is your friend until it ends. I'm going to write that here for you guys to see. You got to understand this, guys. Stop listening to people talk about bubbles. Those are just people that haven't made money in the market and they have sour grapes. Y'all heard of sour grapes, right? When you don't, the trend is your friend until it ends. Sour grapes is real. Hate is real. People get angry because they see people make thousands, millions of dollars, and they don't know how to, and they haven't. So what's the easiest thing to do? Say that it's a bubble. You weren't supposed to make that. You lucked up. Okay. I'll take all the luck then. Great. Let me be lucky then. Joe, you the luckiest dude on the planet. Okay. Anytime somebody tell you you're lucky, they hating on you. As if you didn't have the skill set to make money in the market. I hear it all the time. Like it's what do you guys call that? Like you're trying to, it's like a diss, but you're trying to congratulate me, but it's a diss. Oh, Joe, you are so lucky, man. Man, you were lucky with those investments you made. Man, Joe, you were lucky as an athlete. Joe, man, them trophies you got in golf, boy, you was you the luckiest dude I know. Okay. I'm the luckiest dude you know. Okay. I work hard in everything that I do. I work hard as a golfer. I work harder than any of you guys as a trader and an investor. I work harder than most of you guys when it comes to, when it comes to relationships and building relationships in this particular game. But I'm just lucky. It's not luck. You create your luck. You create your luck. So yeah, I can be lucky. So what? What's up? What's that, a backhanded compliment? That's what it's called, a backhanded compliment. Joe, everybody, Joe, you are so lucky. It's so funny when I hear it. And I used to get angry, and then I just take it for what it is. Okay, I'm lucky then. But I put myself in the position to get lucky. The trend is your friend until it ends. Luck happens the first time. The first time you do something, guys, it is luck. The second time you do it, it becomes a trend. I want you guys to understand that. The first time you do something, whether it's good or bad, it's luck. Or you were unlucky. But if it happens a second and a third time, it becomes a trend. Then you can say, whoa, hold up. This dude then caught it again, and then again, and then again, and then again, and then again. I might need to listen to what this cat is talking about, or the people that are in this room. The trend is your friend until it ends. We're going to spend a lot of time saying that today. The trend is your friend, guys. It's not like when you see a trend happening, you don't get sour grapes because of it. You say, how do I become a part of it? And I'm gonna let you guys in on a secret. When these trends start, they don't just end in one day. Now, the cannabis market, that was a trend that lasted like 6 to 12 months. That's one of the only few industries that I saw that got a lot of hype and then a lot of non-hype really, really fast. Electric charging stations. It was a trend for about 6 months, and then that was it. All right. But for the most part, a lot of these different things that we're investing in, the trends are lasting for a minute. But you got to know when things are going parabolic. You see this chart? You can see the parabolic moment of the SMH. So yeah, the trend is your friend. But how do I buy these trends? You can't wait for it to go back all the way down to where your friend bought it a year or 2 years ago. That's not how trends operate. When stocks trend, guys, they trend in a 45-degree angle. That means they don't come back to the price that you saw last year. Sometimes they do. Sometimes they do, and a lot of the times, if they come back to the same price that it was last year, that means it's about to trend down, not up. That's why it's so important that when we're looking at these stocks, we're looking at the last year, the last 5 years, to make sure that that yellow brick road is angled up. We want to make sure that that yellow line is trending up. Trending up increases my luck. Trending down, I don't want to be around. Trending up, it increases my luck. Trending down, I don't want to be around. So when you look at companies like Intel, Joel can have whatever opinion he wants to have about Intel, but if you notice, this was Intel from 2014 to 2021. Hold on, let me cut this down. At the mall. Spotify going bananas. All right. From 2000, and this is Intel. So I always talk about Intel. Like Intel, I'm like, you will never see me buying Intel. So let's talk about Intel and why Joel was like, there's no way you're going to get me to buy Intel right now. And the reason is because from 2014 all the way to 2020, 21 actually, Intel trended to the upside. If you were a really good, even if you were just an average investor, you would have said, you know what, I'm just going to buy this trending stock every time it touches this yellow brick road. Y'all see that? I know where to buy the lows because all I got to do is open my eyeballs and see this yellow line. The easiest way to get into this stock. I didn't have to pull up 50-some indicators. I ain't got to go into no Reddit room. I didn't have to go and listen to an earnings report. This is the result of all of that. It's like, I don't need to hear this. I don't need to. I know what Intel does. Is everybody buying it or are they selling it? It's trending up. All right, I'll buy it at the yellow brick road. Then the yellow brick road started to go down in 2022. There was no need for me to get in Intel from 2022 until now. Now, in 2020, if you've been around me and if you've been watching my lives, Intel, Ford, Disney, Nike, Pfizer, Carnival Cruise for a minute, there were certain stocks that I had on my hate list. And I didn't hate them because they were losing me money. I hated them because they were losing you money. And I kept telling y'all from 2022, stop buying them. Nobody else is buying them. You can pull me into however many earnings reports you want me to go into. I don't care. I'm looking at the chart. Money is coming out of it. That's why the stock is going down and the average is going down. I don't have to listen to thousandaires try to convince me why this stock should go up, because the millionaires and the billionaires are not buying it. So from 2022 all the way until recently, which is 2025, guys, because I know my people that are buying it now are loving it. And they're like, I told you. You didn't tell me nothing. Because from 2022 to 2025, this stock did absolutely nothing but decimate y'all's accounts. And it's not because of my opinion of it. It's because of Wall Street's opinion of it. Had nothing to do with me. I just know how to look at a chart. I pulled up a chart. I said, ooh, the yellow brick road is angled down. That means Wall Street don't like this stock. So if Wall Street don't like it, I don't like it. Now, if you bought it recently, there are ways you can buy terrible companies and not know what's happening with it. As the yellow brick road started to go down, Intel had to do something, guys, because everybody else was doing well, and this old behemoth of a company wasn't doing anything. Everybody was getting love except for this company. Everybody. It didn't matter what semiconductor company you bought. Everybody was going up. Intel was going down. I'm like, guys, there's 100 semiconductor companies y'all can pick from. And y'all choose the one company that's going down for 4 years. Now, if you got information that the government was getting involved in Intel, which was right around July and August of last year, you would have seen that there was a trend break. All right. It had been going down and then going sideways. And then all of a sudden, guys, after 4 years of destroying you guys' accounts, decimating your accounts, keeping you out of this AI boom, the government said, finally, guys, let's help these fools out. Otherwise, we don't know what's going to happen to the company. The government jumped in and pretty much forced everybody to invest in Intel. Now, I heard that information and I said, I'll believe it when I see it. I'll believe it when I see it. Well, guys, it happened. The government got involved. The government got involved and took Intel from $30 to $84. Now, who's putting Intel in their phones right now? Right now. Who right now will switch out whatever semiconductor chip they got right now with Intel? Say I in the comment section. It doesn't matter. I'm just joking. We all still know that Intel sucks. We all know that Intel is only up because the government is like the mafia and said, NVIDIA, you gonna throw some money at them? Apple, you gonna throw some money at them? Google, you better throw some money at them because we're invested in this company. And we need to get our money out of it. Otherwise, any subsidies or anything that you guys need that's in this bill that's coming out in November, y'all ain't getting nothing. So they was like, all right, here you go, Intel. Here's $5 billion. All right, Intel, here's $10 billion. And Intel's like, thank you. Now, what you gonna do with it now that you got all this money? What you gonna do with it now that you got all this money? Because ain't now one of y'all gonna take your chip out of your phone, your computer, and replace it with an Intel chip. Ain't none of y'all doing it. Like, what are y'all leading? What made you guys get 100? Guys, the market cap tripled. What did you do? I'm gonna tell you, it's because the government is in that. The government is in that bad boy. Now, all right. It lost money for 4 years, came back. I applaud you guys. I am actually happy for anybody that did it because because as much as I talked about it, I know I kept a lot of you guys out of Intel. Because I was like, man, you can't trade with me if you buy this, if you buy this stock. You can't invest with me. Cats had to go invest on their own and not tell Joel what they were doing because y'all knew how I felt about this company. But the moral of the story is that even when big personalities like me say stay out of a company, although I was right for 4 years, for the last, how many weeks was this? For the last, since October, November, December, January, February, March, April. For 6 months, I've been wrong. And I can admit this is so. The 200 week is now starting to turn around after going down for 4 years. But now the company is going parabolic. It's going parabolic, guys. I mean, that ain't even, that's parabolic. That's parabolic. You took too many Viagra. Now it's time to go to the hospital. You took too many Viagra. That mug is not coming down. Okay? So, be careful if you're in it, but the trend is your friend until it ends. This is the first time, guys, I'm like, hold on, guys, hold on as long as you can, because if they gonna keep pushing it up, stay with it. Don't get out until the trend ends. Now, guys, when Intel finally comes down, when that Viagra and Cialis and honey start wearing off, because right now it ain't. When the Cialis start wearing off, it's gonna be ugly. But for now, ride the trend. All right? If it falls, it might fall 10, 15% in one day. When things go parabolic like this, it's a 15% drop in a day, especially, let's say the market just goes down big one day. Anybody that's had a 200 or 300% return in Intel, they're going to sell. And guys, at some point, the government's going to have to sell, unless the government has a rule that says they can't sell for a certain amount of time. I don't know how long they have to be in it. Maybe one of you guys can pull that information up. I don't know how long. I don't know if they can sell all their shares in a week if they wanted to. I don't know how that works. I just know that they're in it, and they're forcing everybody else to invest in it. America wants to be the #1 controller of all technology and semiconductors. So if what the government wants, the government gets, especially in this administration. If you're up 300%, congratulations. That's what I'm talking about. Ride it, ride it, ride it. Ride that thing. But it's gonna be ugly when it finally comes down. Ugly. But I don't want to scare you. Just stay in it as long as you can. You want it to get back to about, like, if it does fall, I'm gonna give you guys an idea of where it can fall. If I was to draw this 45-degree angle right here, you're talking about $64 minimum that it can fall to. 65 from where it is right now. 87 to 65 is pretty significant. That's like a $850,000 house going down to 650. Guys, Intel can make this move right here to the 60 range and still be bullish. Y'all see that? Do y'all know what this area right here is? It's gonna scare you. $60. That's how parabolic this bad boy went. It can drop from 87 to 60 and still be bullish. Okay? And the 200 week is just now catching up. And what's scary is that stocks will see their 200 week moving average, once every, 18 to 24 months. The 200 week moving average is at 40. 40. That means this bad boy can get cut in half and still be bullish. What? Yes, this stock can get cut in half, guys, and people will still jump in it at 40. It sure can. I seen it happen all the time. They have a 10% stake. Yeah, but when do they get to sell it? Is there a rule? I need one of you guys to look it up. I know the government's involved in it, but I don't know if it's like a 1 year or 2 year investment, if they can sell it all if they wanted to. Like contractually, we need to find out what that contract says. Because if they pull all of their, if you look up one day and they say the government is pulling all of its funds out of Intel, that's a wrap for this stock. It's a rappy wrap. They're like, what? Yeah. It's a rappy wrap. All right, so be careful. All right. Let's look at Micron, another semiconductor company that's up huge. It's up huge. Good Lord. Where? This is crazy. Look, even if you drew this trend line ain't even 45 degrees, guys. 45 degrees is right here. That's 45 degrees right there. This bad boy is like bump 45 degrees. We just gonna keep moving. The first area that this can drop to is 450. Right now, Micron is sitting at $530 a share. It can easily drop to this parabolic line, which is somewhere in the 450 range. If it just goes back to its normal 45-degree optimal angle, guys, that's in the 300 range. That's just to go back to normal. Normal bullishness is 300. Ain't no way you gonna get me to buy Micron for 531. When I see that the 45-degree angle is at 300. Now, if you want to get a little bit more technical, and let's use the Fibonacci retracement tools. Good old Fibonacci. I don't even know where to put the fib. Where should I start the fib, guys? at the yellow brick road. Even if I put a fib right here, I don't even know where to put the fib. What if I put a fib there? If I put a fib right there, Micron can drop way down here to 350 and still be bullish. We can drop to 350 from 530 and cats will still be eating it up. I think that's what happens during the summertime. I think they all pull back down to about their 45-degree angle and continue this move next year. That's my call. My call is that April, everyone knows that April is April, guys, if you look at all the months, and I'm going to pull it up for you guys because no one believes me when I say this. I'm going to ask TikTok. I'm not TikTok. I'm going to ask Chat. I'm going to say, Chat GPT. Can you tell me, on average, which months are the most profitable for the stock market? I need a big chart for everyone to see. And you're going to see that April is number one. And we're about to finish April. We're about to get out of April into May. Y'all know what May stands for? Sell in May and go away. Did y'all know that? Sell in May and go away. Guys, it's like, well, where they going to? When we coming back? We ain't coming back to October. This historically has been the pattern. Doesn't mean it is gonna happen, guys. With this administration, anything can happen. But in the stock world, you have to kind of know the areas where the market explodes in price and when people start selling off. sell in May and go away is a real thing. Doesn't mean that on May 1st, everything's going to turn around. It just means that everybody's going to be on guard for any negative news. That means negative news is going to make the market fall a little bit more. Just like in April, positive news made the market do extremely well. Anything that was positive after we found out the war was going to get extended, that's why the market is back at all-time highs. April, everyone knows April is the best month for the stock market, followed by November and December. The worst months are May, September, and October. If you don't believe me, maybe chat will make you a believer. Let me see what chat said. And chat ain't right either, right? You know, is better than Uncle Al. All right. Oh, and I'm wrong, actually. It says that I'm wrong, and I admit this is so. I did say the right months, but it was the wrong order. November is the best month historically. I thought it was April. Let me show you guys. Hold on so you guys can see. I'm going to pull it up. Hold your horses. I'm going to pull it up for you to see. All right, we should get it now. All right, cool. Y'all see that? Stock market seasonality chart. What does it say here? It says that November is the best month historically. That's why at the end of the year, we have this thing called the Christmas rally that everybody prepares theirself for. Traders love it. It doesn't always hit. In fact, lately, because everybody knows about it, it hasn't really been doing nothing in November and December. But historically, November is the best month, followed by December, followed by April, then July. But look down here, May, slow month. September, the worst. September, the worst. But it makes a lot of sense, right? If you have a real bad month in September and then a little bit in October, then it usually gets a pop in November and December. And then because tech and AI has been really, really pushing this market, they get out of the black or into the black. I always get that confused. They become profitable at the end of the year during Christmas, but they don't tell you what they did until the first quarter. Those first quarter earnings. They let you know how they did during that time. And they're like, we sold the most iPhones ever. Right? And then the market's like, yay. And they buy up Apple. And then earnings comes out again in the second quarter. But by then, we're selling it because, they had great earnings. The tech stocks move. And then everybody else tries to jump in April and May. And we get out. Traders, not investors. Traders, not investors. Investors, we're there for the long run. To do is in September and October and at the beginning of the year, I like to add new positions and I like to add to some of my losers. So by September, October, I'm looking at my portfolio. I start kicking out companies that didn't do well. And I start adding companies that I think can go up in price the following year. All right. I do an adjustment of my portfolio, usually in September, October, and then again right around the end of the first quarter like now, and then I hold on for dear life for the rest of the year. And I look for the volatility index to rise above 50. All right. Cool. All right. So just so you know, y'all know me. I like to say stuff. I like to give my opinion, but I like to back it with statistics, even if I'm wrong. Because sometimes I might say, hey, April is the best month, and then you guys will leave thinking April is the best month, and it's actually November. And April is the third best month. right? But you guys are going to respectfully challenge me in the comment section because y'all know I got clapback game. I got clapback game. Can't just be rude to me and expect me not to clap back. All right, we gonna do it. All right, let's go look at SanDisk real quick. Let's go back to charts. All right, back to charts. All right, that was Micron. Why is Micron important? Because a lot of people have been investing in that one because there is no way you can get into SanDisk ain't letting nobody get in. They're like, I don't give a dang about a trend line. Like, if you buying SanDisk, you got FOMO. I ain't giving you a chance to get in. I ain't pulling back. I'm going straight up. I'm like, well, fine. I got straight sour grapes when it comes to SanDisk. I'm like, man, F SanDisk. Don't nobody use SanDisk anyway. Last time I used a SanDisk was in my camera. Nobody uses a camera anymore. We all use our phones. So I don't need you anyway with your $1,000 stock price. Knowing I'm mad I'm not in this bad boy. Guys, this was the number one company in the S&P 500 last year. And then it says, you think I went up big last year? Hold my beer. I'm like, how are you up this big after being up big last year? Jeez, guys, look at the relative strength index. It don't know what to do. Guys, it don't even go lower than overbought. It's just chilling in the overbought region for like 8-9 months. So if you using the relative strength index and you trying to short this, you out of your mind. I ain't seen nothing like this. This is crazy. You would think you wouldn't, when you look at this chart, you wouldn't think that this is overbought. Like, is this really showing overbought since August? And we're looking at a week chart. We ain't even looking at a day chart, guys. This is a week chart. And it's overbought on the relative strength index by 8 months. You're not going to find a chart that looks like this. This is absolutely ridiculous. But if you're in it, keep making money. Don't listen to Joel. Joel mad. You know, Joel got to be in everything. I want to be a part of everything. When I don't feel like I'm a part of it, I get mad. Like I didn't do my job. I like to stunt. I can't even stunt. I can't even stunt. I'm mad. I'm like, dang. But you didn't buy sand. How can you call yourself the GOAT and you ain't buy SanDisk? I'm like, I know. Jeez. This bad boy is moving. It's not giving anyone a chance to get in. If you're in it, hold on for dear life. Because when it breaks, guys, and we thought it was going to happen here. We thought it was going to happen here, and it didn't. It dropped for a minute. We thought it was going to happen. Was that it? That was it? Oh, we thought, wait. No, that was April. Yeah, we thought it was going to happen right here. It dropped from 723. Now, that was a pretty decent move. It dropped from 7 to that little move y'all see right there. That's why when it drops, oh, it's going to hurt. You're going to feel the pain. It's like a $700,000 house, guys, in 3 weeks, going from 700,000 to 500,000. That's a big move. That's a huge move in 3 weeks because you think after making that much money, you're like, it can't go lower. It can't go lower. Oh, yes, it can. And then you thought it was over? Nah, son. That bad boy doubled It went to 700, guys. Dropped to 500 and then doubled on your ass. What? Double? And not a double, guys, in a year or two. It doubled since March.
Where the hell you at?
You're talking about 1 week, 2 weeks, 3 weeks, 7 weeks ago. It doubled in 7 weeks. And you trying to tell me to go buy a CD that's making 3%? Man, get out of here. Y'all know how many times I wanted to curse out my financial planner? Me and her do not get along. If it wasn't for my wife, I might have called her out her name. I ain't never called a woman out her name, but she got close. Never have I called a woman out her name, but boy, oh boy, in some of our meetings, I had to hold my tongue. Stop trying to put me in dividends when SanDisk is growing 100% in 6 or 7 weeks. Do you know how long it will take a 4% CD to pay out 100%? Like 20 years? Man, get out of here. I am not 95 years old yet. When I'm 95, maybe I'll buy a CD or a dividend paying stock. When I'm sitting on 100 mil and I'm like, all right, 3% of 100 mil, I'll live off $3 million. But until then, stop it. You better be glad you good at these insurance policies and this trust fund. Because, boy, we do not get along. I don't know why my wife be making me come in those meetings, knowing I got high blood pressure. All right, so that's SanDisk. That is SanDisk. Please do not buy it way up here now, guys, because when it drops, it's going to drop big time. Do I think it's going to be over? No, I think it can drop to $600, guys, and then double. Because it's in high demand. These AI data centers, this is what they need for storage. They need so until another company comes along that handles storage at the capacity that these data centers are going to be running at. Companies like Micron, they're going to freaking go through the roof. So be careful. All right, you guys wanted to look at, let's look at what I bought today. I bought Oklo. Since we're talking about data centers, since we're talking about AI, why did I buy this company? Well, for one, y'all know me, I ain't buying nothing unless it's on sale, period. Oklo, which is it's not the leader in, this company by all means, guys, is not a leader in nuclear power plants. But what I like about this one is that though a $5 trillion company, not your cousin Al, not your thousandaire cousin Al, $1 trillion company is investing in this company. And that company is called NVIDIA. And if I see NVIDIA buying a small $10 billion company like this, and it's involved in nuclear power, and NVIDIA is trying to push AI and data centers, then I'm going to buy the same thing that they buy. Because I've done it before. I saw them buying sound. I made a whole bunch of money in sound. I saw them buying Applied Digital. I made money in Applied Digital. I saw NVIDIA buying Arista Networks. I'm buying Arista Networks. I checked chat and I said, chat, what is NVIDIA's number one investment right now? Chat said CoreWeave. I said, all right, hold on. I'm about to fact check you. I said, Claude. We call him Clyde here. Clyde. What is NVIDIA's number one investment right now? Clyde said CoreWeave. I said, all right, I ain't even tell chat that I was back checking, I was fact checking ChatGPT. So I bought CoreWeave. What? We're up like what, guys? How much are we up? 30, 40, 50% right now? I then got an alert that NVIDIA is now buying Oklo. Well, guess what? It didn't work 4 times already. I'm buying it. If NVIDIA's buying it, I'm buying it. So I'm buying Oklo. I bought some today. I didn't buy a full position. I'm expecting this company to fall. I am. I'm expecting this to go down in value. How much, Joel? That yellow brick road. We got close to the yellow brick road and didn't quite get there. I don't trust it. Here's what's crazy. I bought in today in the $70 range. Guys, the yellow brick road is at $30. That means when I invested today, I had to ask myself, are you willing to be down 50% in your investment? And I said, if NVIDIA's buying it, then I'm buying it. That's my strategy. If NVIDIA's buying it, I'm going to use the what would Joel do method. And I'm going to buy this company that they're buying. I waited patiently. Y'all see how patient I was? We talked about this stock at least once or twice a week. Patience. I can be patient. There's thousands of companies out there. Wait. Finally got an alert. Doesn't mean that this is the best entry. But damn, I've been right a lot in the past decade. What? I win 90-something%. So I have to take this trade. NVIDIA's buying it. The yellow brick road is angled up. We're down more than 50%. It has all the ingredients for a what would Joe do special. It's in people are buying it during a time where this is hot. Nuclear power. Nobody's really talking about nuclear power right now. They're too focused on data centers and fiber optics but you gotta power it with something, right? So those were all the things that I was thinking about before I bought into the company. Now you're right, soy boy. XE just came out too. XE is a energy company. We'll look at that one after this one. XE is a company that just went public last week. The first day that it came out, guys, it was up 25%. I haven't looked at the chart since then, so we'll pull it up in a second. But if you're interested in jumping into this trade with me, I'm like Jerry Maguire, where I was like, all right, guys, who's coming with me? Who's coming with me? I just bought Oklo today. All right. If you were trading Oklo, this is how the trade looks. Look at that. That is a beautiful chart. This is how you want to buy when you're trading. When you want to trade something, guys, look at this. I want you to look at something. Using the what would Joel do method. If you don't know what my method is I need a moving average. The moving averages, so I use a method that I created called the BTG method. The BTG method is bias, trigger, and goal. every single solitary chart that you're going to look at, no matter how long I've been doing this, you're going to see a major moving average that's going to always give you your bias. So that anyone that's watching, you're always going to know the bias of the chart just by looking at the biggest line on the chart and the direction it's angled. So you don't even have to ask if this is bullish, because Oklo has a bullish chart because the 200-day moving average is angled up. However, sometimes bullish companies go down in value. That's how you know they're on sale. And when it's on sale, you wait until it starts to go up again. That's the what would Joe do method. That's the trigger. And then your goal can be, I don't know what your goal is. If I was trading this, maybe my goal would be when it gets to the 200-day. Maybe my goal is to make a 200% return. I don't know what the goal is. Everybody's going to have a different goal, but a lot of us are going to have the same bias and the same triggers. Okay? It also went oversold on the RSI. It had everything that I needed to buy. Y'all see this? The relative strength index went blue. That means oversold. The MACD histogram, dang near the oldest dang indicator ever created. If you ever started trading the stock market, this was like the first thing we learned. The MACD. The MACD and stochastics and relative strength index. Yes, guys, I am bringing the basics back. We have gotten away from the basics. But now the basics look, they done beautified the basics. The basics then gone and got, gone and got sexy. Got sexy colors now. They don't have that plain green. Got this vibrant green. It's all hip now. So now the MACD has gone green. We broke that trend. We're heading to the 200-day moving average. Very easy trade. Why am I buying it now? Because I wasn't buying it as a trade. I was buying it as an investment. Guys, I'm already up 5%. I bought it early this morning at the lows. And then that bad boy ran. I was like, how am I already up? It's up, 6.5%? I must have bought it when it was only down or only up 2%. That's great. Maybe it gets to this 200-day and it stays. Maybe we get a run like SanDisk. Maybe this bad boy run all the way back up to its all-time highs, which is 193. And then I can start stunting again. And making everybody mad. Joe, why didn't you tell us when you were buying it? I always get that. Joe, you be keeping all the secrets. I can't stand people like you. You just come out after you made it. Anyone can do that. I'm like, you realize every time I buy something, I tell y'all when I'm buying it. All right, so that's Oklo. All right. Again, that's a macro view of the chart. This is the micro. Let's say you wanted to intraday trade this bad boy, which I'm not. Actually, we'll talk about that later. I can't talk about day trading till after 8. I got to get through you guys' stocks first. All right, let's look at, what was the other one? Oh, XE. XE just went public. If you guys are interested in X Energy, guys, this company is being backed by Amazon. Was it Amazon, guys? I might be wrong. It's one of the top 5 companies. It's either Amazon or I think it's Amazon. I think Amazon is buying this one because the one that Oklo is being bought by NVIDIA. This one's backed by Amazon. I'm gonna go with Amazon. I'm gonna go with Amazon as my final answer. Am I correct? Did I get the daily double? All right. This stock came out $29. And look, we're looking at a day chart, so the stock only been out for 2-3 days. We do have a rule about companies that just IPO. No, you wouldn't have been able to buy it down here in the $10 range unless you had access to a broker that allows you to get into this IPO early. More than likely, you needed a large sum of money, $50,000 or more. If not, you had to wait till the first day of trading. And if you waited to the first day of trading, you could have bought it for $30. And there's nothing wrong with buying things, guys, when they first came out. When Facebook first came out, guys, I bought it for $45 a share. And then Facebook proceeded to drop all the way down to 17. And then it rose to whatever it is today, $1,000 a share or something crazy. So yeah, I was in it from $45 to 17. Imagine being hype about something and then immediately being down 70 or 80%. So the rule that we make is that when a company first comes out, when a company first IPOs, we like to wait 3 to 6 months before we buy it. We want to get out of that lockout period when they're able to sell their shares. And once the primary investors that are invested in it, once they're able to get completely out, then we like to buy, because usually when they decide that they want to sell their stock, the stock is going to take a hit and come down in price. That's the lockup period is usually 3 to 6 months. So that's why we wait 3 to 6 months before we buy companies like this. Nothing wrong with buying it here, and then if it drops, buy more. That's what I'm doing in Oklo right now. I'm expecting it to drop 50%. So if you can't take a 50% drop, don't buy it. I only put a quarter position on. What's a quarter position? Let's say I wanted to put $10,000 into Oklo. And y'all know that when I buy things, I buy them because I believe one day you can add a zero to whatever your investment is. So if I invest $10,000, it's because in the future, I think that $10,000 can be worth $100,000. In order for that to happen, the stock has to be able to grow 10 times its value. Oklo right now is 10 billion in size. XE is also, I think, in that $10 billion range. In fact, let me go and search and see what the market cap is. The market cap of XE and Oklo, if you're interested in these companies, XE's market cap is $9 billion in size, and Oklo is $13 billion in size. What does that mean? A lot of you guys don't know what that means. That means this company right now is $9 billion in size. Uh-oh. It's $9 billion in size. You make your money here. You make your money from the share price growing. But that share price is attached to how big the company is. You make money when that market cap grows. If this market cap grows to 90 billion, that's going to take your $35 share to $350. Now, there is a finite amount of money, guys. You can't just say this stock is going to go to 1,000 a share because somebody's willing to pay 1,000. That stock price is attached to the market cap at that time. XE right now is a $9 billion company. So I have to ask myself, are there companies like this that are worth 90 billion or 100 billion? The answer is yes. Okay? They don't have $1 trillion market caps yet, but they do have $100 billion market caps. So if this company decides to grow and grow and grow over the years and grow really, really fast and do really, really well, realistically, my $35 can be worth $350 one day. Now, if you felt like your $35 was going to go to $3,000 or $30,000 per share, you're not really being realistic because the number is attached to that market cap. Oklo has a $13 billion market cap. Okay? It's slightly bigger. It's 13 billion. In order to make 10 times my money, this market cap for Oklo has to hit 130 billion. I think these companies grow over the years. Companies like CoreWeave, 60 billion. So you guys need to really look at that market cap, because the market cap kind of tells you if a company is a baby, an adolescent, or an adult. Once it starts getting into an adult, the fortunes that you could have made have already been made. NVIDIA, guys, is a $5 trillion company. Why are you guys buying it now? You're not going to get rich off of it. You missed the move. You should have been buying NVIDIA back in 2018 and 19 when I was talking about it, when it was only 100 billion in size. It's now 100 billion to 5 trillion. That's 50 times your money, I think. No. Yes. 50 times your money. Them days is over. Ain't nobody making 50 times their money on NVIDIA. They fool you by letting you see that $216 stock price. This stock price might get to 1,000 a share, maybe. That'll take this company up to 20 trillion. If NVIDIA goes from $200 a share, guys, to $800 a share, or even 1,000, which a lot of you guys are banking on, that means you got to multiply the stock price times 5. You got to multiply the market cap times 5. You're telling me you think NVIDIA is going to be a $25 trillion company in the next 2 or 3 years? Not going to happen. Now, can it grow? Can it double in size? Yeah. Shoot, it just did it. This bad boy doubled in size from... Do y'all know you could have bought NVIDIA last year in April? You're going to be mad when you see this. You could have bought NVIDIA for $90 a share last year. 90. And now it's doubled. The largest company on the planet, which is amazing. Can you guys imagine all the McDonald's in the world doubling? Can you imagine doubling the restaurants that are out there? And I know this is not, I know it's apples to oranges or whatever, but just think about it. Can you imagine Apple doubling the production of the iPhones that they're selling right now, and computers and whatever they have? Doubling it. That's crazy. That is wild. Can it happen? Yeah, especially when they start going into other countries that's not using the semiconductor chips. But that's not what's going to probably take it to a 10 or 15 trillion dollar company. What's going to take it there also is the fact that they're invested in companies like CoreWeave, invested in companies like Oklo. They know that their market cap is too big now. So now they got to go invest in companies that they believe can grow, so that they can make money being invested in those companies that can also help the infrastructure that they're building. All right, very, very smart to not only use them, but to invest in the same companies that they're using in their ecosystem. I would think that that's against the rules, but whatever. Who cares? So NVIDIA hit an all-time high today. It's the highest price that has ever been in history. Anybody that told you not to buy NVIDIA, they were wrong. Y'all know that? Anybody that told you not to buy, I want you to slap them across the face. Mama, you told me not to buy NVIDIA. Don't go do that. You were wrong. Every single solitary Reddit room, Michael Burry, NVIDIA's done. NVIDIA said, hold my beer, you silly mongrels. We are the richest company on the planet, and you want to go listen to these thousandaires over here? What do these thousandaires know about making money? Nothing. Nada. They wannabes. There's the we ares, and then there's the wannabes. The we ares and the wannabes. Stop listening to wannabes. I keep telling y'all that. Stop shorting the best companies on the planet. You just basically don't like your money. Like, why? Why short companies that were created to make money? They got all the makings of monopolies and insider trading and all the makings of things that you don't want to go against the mafia or the mob, guys. You're literally saying, I want to go up against Al Capone. Nah, no you don't. Let them be, and then go pick on some others terrible companies. Stop trying to pick on the biggest, baddest companies on the planet. You guys are going to get run over every single time. And I hate seeing it. I hate seeing when it happens, because it makes no sense. You're going to go up against the largest company on the planet. They don't play by the same rules we play by. You got kings, queens. You got the richest people on the planet invested in this company. You really think they're going to let it go down in price? You got the richest, most powerful people invested in these companies. But little old you gonna make the stock go down. Man, get out of here. Y'all better put your ego to the side when it comes to these companies. Especially the top 20, stay away from them when it comes to shorting. There's a lot of terrible companies out there. Guys, I can give you a list of 200 very terrible companies. Horrible. Horrible. And you can make a killing shorting them. Stop shorting the best of the best. Stop buying puts on the best of the best. They're going to make you look like a fool every time. I don't like looking like a fool. I like stunting and saying, look at my... Guys, I'm about to have a 4,000% return in NVIDIA. 4,000. I was happy to get 1,000. Remember, if I can add a 0 and make 10 times my money, I was going to be satisfied. They said, nah, Joel, you one of them smarties. You was down with us way back in 2018 and 2020, so we're going to reward you. And we're going to give you a 4,000% return. Because you understand. You want to be part of the top 10%. You have been anointed. I'm like, thank you. But how do I convince them to do it? Time. Okay. Y'all better stop trying to... Why would you short a chart to look like that? Please tell me. Please don't tell me that it's bumping up against a Bollinger Band. Please don't tell me that the relative strength index is overbought. Y'all saw SanDisk. It was overbought for 8 months. When these stocks go up, guys, they don't give a dang about a chart. They don't. We spent a lot of time here because this is the largest company on the planet. Everyone should have had some piece of it at some point. Just because. It's like when you become a trader and you own the book by Steve Neeson, Candlestick Chart Reading. You can't be a trader without owning that book. You gotta have it. It's like your Bible. as a trader or as an investor, you got to have Nvidia or Apple in your portfolio just for good luck. Just for good luck. But you shouldn't be buying it here. Nvidia is going to give you a chance to buy it. It always gives you a chance to buy it. If you want to use the what would Joe do method, buy it at moving averages. Every chart that we look at, guys, you're going to see a major moving average. Buy it when it gets to these moving averages. When it gets underneath these moving averages, guys, oh my God, you're talking about the biggest, baddest companies. Now, when it's angled down, you don't want to be around. When it's angled up, it's the easiest way to catch bottoms. It's just that Nvidia don't give you that many chance to buy it at the yellow brick road. If you were able to get in here, guys, that was 2022. I don't think it even gave you a chance after that. It hit it in 2022, and then it tried to get there last year, but it's such a bullish company, it didn't even give you a chance. It was like, nah. It was like, no way, Jose. We are not dropping down there. We got things to do. We ain't got time to be going down there. We got things to do. Like, we got AI data centers. Like, we got short sellers to squeeze. And it's not overbought yet. It's not overbought on the relative strength index. We're talking about Nvidia. The largest, biggest, baddest company on the planet. That they so bad, nobody will even say that they have a monopoly. Y'all realize that? They don't even bring up the antitrust laws or the M word when it comes to Nvidia. They've had a monopoly for like 4 years. That's how bad they are. They're like, I wish you would say it. Say it and see what we do. Say it. I dare you. Say it. Say the M word. All right. I'm making jokes, guys, because there's no reason to be shorting this company unless you're a professional trader. All right. What's another stock? You guys wanted me to look at, we looked at XE, we looked at Oklo. Let's look at TMQ. I don't know what TMQ is, but we're going to pull it up. So let's say we pull up a company, guys, and nobody knows what it is, right? First of all, in my lives, guys, you have to show a company that's $1 billion or higher, all right? So this company is... it's 740 million in size. Now, I won't get in trouble at 700 million. It's close to $1 billion, but this is not a company that's on Wall Street's radar yet. Now, it used to be $1 billion company. I can tell by looking at the chart. It used to be about 714. It used to be about $2 billion in size. If you guys come into a live like this, or if you're in a Reddit room, and you see a stock chart, and you hear a good salesperson tell you to buy it, because we are good salespeople. But I don't want you guys to buy because I'm a great salesperson. I want you guys to do this. If you get information, you got one or two things you can do. The easiest these days is to go to your GPT. Whether you're using ChatGPT, whether you're using Claude, or whether you're using Gemini. There's 3 other ones. Go and ask it. Say, look, what the heck is TMQ? What is its market cap? What is TMQ? What is its market cap? And why should I buy it? Just like that. And then your GPT is going to pull up information. This is how you're fact checking. You're checking on a stock tip. And when you're checking on that stock tip, you're getting all the information, not all the information, but you're getting the viable information that traders and investors look for when they're looking at a company like this, right? So it immediately, my chat immediately pulled up a chart. And the chart in the middle of it, on that chart, I can pick what it did today. I can pick what it did in the last 5 days. I can pick what it did in the last year. If I bought this stock a year ago, well, it looks like it IPO'd. Yeah, if I bought this stock a year ago, it says I'm up 150%. If I bought it from January till now, it's bearish. So the stock has been bearish year to date. In my opinion, I don't like that when everything is at all-time highs. When everything's at all-time highs, this stock should be up too. Why is Wall Street not buying this one? Why is it down 6% and everything else is at all-time highs? It's not going with the trend of the market. I don't like companies that don't follow the trend of the market. Doesn't mean that I can't buy it. I gotta still do a little bit of research. In the last year, if you bought it though, it's up 150%. In the last 5 years, if you bought it, you're up 89%. So hold up, 5 years ago, I'm up 89. So just recently it went parabolic. I immediately got that information because if I look at the last 3 years, if I look at the last year, I'm up 150. But in the last 5 years, I'm up 89. I lost some percentage. That immediately told me that, this stock went parabolic and people took their profits and now it's not up while everything else is up. So that's a red flag to me. But then I read what it's about. It used to be a $2 or $3 billion company. Now it's worth $700 million. So Wall Street is pulling money out of it. It's a small cap mining stock focused on copper, zinc, gold, and silver. Their main project is the Alaska Ambler Mining District, one of the richest untapped copper deposits in the United States. So now I'm thinking, okay, if they're involved in copper, the reason why the company is down is because real estate is down. Who uses the most copper? Copper is used industrially, right? And it's used a lot when real estate is up. When real estate is up, companies like Freeport-McMoRan is probably up in value. So this is probably down so now I'm saying, okay, now I understand why it's down. So I'm going to put a question mark by it. And then I'm going to go and think, then I'm going to look at other real estate market type stocks and see, if there's a pattern for when people are buying it or when people are selling it or what have you, right? And then see if this is worth investing in. So, you take stock tips and then you try to fit it into what you're doing. Now, if you're trading it, that's totally different. If I was trading this bad boy and I just wanted to make money in the next 7 or 10 days, having that information matters, but it really don't matter. Like when I'm trading, guys, I don't need that detail of information. All I need to know is that it's a mining company. So when I pull up my chart, if I wanted to make money in the next 7 or 10 days, I'm gonna pull up a day chart. I'm gonna look at the 200-day moving average, and I'm gonna say, the 200-day moving average is angled up. I'm trading this bad boy every time we go down, and then we start to break back up. So even if I knew nothing about this company, I would have been looking at this chart like this. If you were using the What Would Joe Do method, I'm going to wait until it goes down in price. If it breaks that trend and starts to go green again using a trending indicator like this, I'm going to get in right there. Very easy, right? Soon as we broke this trend, it went from red to green. I'm going to get in as soon as it starts to go green. But this is a trade. That means I'm not buying this as an investment. I'm only in this for 7, 14, 21 days. Then when that trend is over, then I'll get out. Where did I do that? Right. So once that trend ends, I'm going to draw a trend line here. If I'm in there and we start to trend to the upside and I put my little 45-degree angle, and we ride this 45-degree angles, the trend is my friend until it ends right here. Joel will be out when we start getting red candles and it starts to go red on the MACD down below. Very simple, basic. I didn't have to know nothing about this company. And where were we probably going to? The 200-day moving average. And then guess what, guys? I will run that trade right back again. Just like that. And I would be in this bad boy long. Very simple, basic way to look at the market if you were using the What Would Joe Do method. But you need a trending indicator. You need a bias, which is a moving average. And then you need one indicator in the lower part of your screen. There are 3 trending indicators that you can use that color codes your chart. You got the TTM trend, you have the TTM squeeze, and you have the candle trend if you use Thinkorswim. All 3 work. You gotta know how to draw trend lines. All trend lines are subjective. Y'all see everything going down in price. I could have drawn 5 different trend lines. It didn't matter. I could have drawn a trend line here. I could have drawn a trend line here. I could have drawn a trend line in the middle of everything. It didn't matter. Once it broke all of that and it started to go green, the only thing that mattered is that you broke from the left side to the right side of that trend line and it started to go green. That's all that matters. Once it started to go green, I can give myself an edge to make money to the upside. That's using the What Would Joe Do method. The What Would Joe Do method, you have to use a moving average, you have to use a trending indicator, and you have to know what day or candle you get in on that trend. Everyone knows in this room that you try to get into that trend within the first 3 candles. If you come to me and you say, Joel, I just bought TMQ. Everybody in this room knows I'm going to ask you, what day are you in on that trend? If you say, oh, I just bought it on the 17th day, I'm going to cut you off and hang up the phone. Because 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, this is the 17th day in this trend. Where were you 14 days ago? You could have been trending for 2 weeks. You want to get in 3 weeks later? You can't trade with me. You late trader. You cannot trade with me if you're getting in on 7, 8, 9, 10, 15, 16, 18 day trends. But if you don't know what day you're in, that's probably why you're not doing well in the market. You don't know if you're early or late in the trend. I use a 10 candle trend system. That means it doesn't matter what chart we look at. I can look at a week chart. Watch this. I can look at a week chart. What day am I in on this trend? If I was looking at a week chart, what day am I in on this trend? I don't know. Let's see when this trend started. If it went down in price and we started to go up, well, the new trend, right? Let's say it was this trend. We went down. A trend always starts after a color change. So let's say this trend went down here, right? And then it started to go up. I want to be in on day 3, 4, 5. Not on day 6, 7, 8, 9, 10, where you still made money. I don't want to be in on day 11, 12, or 13. Even though 14 and 15 was a big day, I don't want to be in way over here on day 20. This is week 20. Now you want to get in the trend? If I was trading this right now, what day will I be in this trend? Day 3. Ooh, that's what I'm looking for. Because if I'm wrong, I want to be wrong immediately. But if I'm right, it's probably going to trend for 10 candles minimum back to this upside. If I was looking at a 15-minute chart, I know because you guys are like, does it work? It works on every chart. I don't give a dang what chart you look at. This is a 15-minute chart. I've never traded this ever, but I will trade it better than you. It breaks this trend. I want to be in on the first 2 to 3 candles. I don't want to be in on the 4, 5, 7, 8, 9, 10, 11, 12, 16th candle. Even though this bad boy been moving. I want to get in early and ride this trend. Once the trend goes down like this, I want to be in within those first 3 days. Or, I'm sorry, 3 candles. I know I keep saying days. It depends on what chart you're looking at. I want to be in on the first 3 15-minute candles. We break this trend. I want to be in the first 3 to catch this move. Because after about 10, 4, 5, 6, 7, 8, 9, 10, the trend's going to be over. It doesn't matter what chart I look at. This is the 5-minute chart. Same thing. If I was trading this earlier today, I want to be in early in this trend because by the time you get to about the 10th green candle, it starts to go red. Then when it starts to go green again, I want to get in kind of early, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, before it starts to go down again. Every time that color changes, the trend changes. All right. And then it ended the day with about 1, 2, 3, 4, 5, 6, 7, 8, 9 perfect candles. I use a 10 candle trend strategy that I created. Joel Harrison. Because I've been trading for years. And I've noticed these patterns. And I said, dang, every don't matter what chart we look at, it's like the same thing. Now, you know, every now and then you'll get a bunch of this is a month chart. You could have got in, every now and then you can get in on the 8th or 9th candle, but it started to go parabolic around about the 13th candle. And then it went down. Anybody expecting to make money, guys, this stock went this is a month chart. You had 1 month, 2 months, 3 months, 4, 5 months, 6 months, 7 months, 8 months, 9 months, 10 months. You had 11 months to get in. And then on the 12th month, it went parabolic, and then everybody wanted to get in on the 12th month. You want to get in after a full year. Okay. You can't trade with me. Ever. No sirree. Go trade on your own. All right. No, heck no. Bollinger Bands are the worst. Bollinger Bands, in my opinion, is the worst indicator ever created in the history of technical charts. The worst, absolute worst, never met any individual on this planet that has ever been profitable using Bollinger Bands. Not a single person. I've never even seen it work. You don't believe me? I don't care what chart we look at, guys. Ask me to put a Bollinger Band on it. I guarantee it doesn't reverse at any of the levels. And because I'm a scientist when it comes to this thing, do y'all know that Bollinger Bands, what you see today, ain't what happened 2 weeks ago? If you don't believe me, mark your charts right now where a stock is at that Bollinger Band, and then check it 3 weeks from now. It's gonna be a different value. That means you can't even fact check and go backwards and test the strategy because the values ain't even right. It's the worst indicator I've ever seen, ever created, ever, period, point blank. Don't work, never work. Please stop using them. You're like, damn, all I did was mention Bollinger Bands. Tell us how you really feel, Joe. I hate them. And I don't hate too many things. Because I hate seeing y'all lose money. I really do. I hate seeing y'all lose money. I really do. Stop using them. All right, it's almost 8, so I got to show you guys some more stocks. This is Schwab. So Thinkorswim is what I'm using right now. And Charles Schwab owns this platform. Okay? If you're using a week chart, the yellow brick road is angled up. Everybody and their mama knows to buy here. Ooh, excuse me. Another reason why I don't use Bollinger Bands, guys, is because it limits you. It's kind of like driving. If I was driving and somebody put, let's say I was driving, but about 30 feet in front of me, all I saw was a brick wall the whole time. So I'm looking at a brick wall as I'm going up. There's no way you will hold something for a 3,000 or a 4,000% return if you see an area that's going to stop your momentum from going in that direction. That's why I hate them. Because trading and investing is about momentum. It's never been about counter trending. Now, you can buy things that are trending to the upside when they're on sale by using a moving average. But counter trending is a train is moving in one direction and then it's about to move into the opposite direction. Y'all know that only happens like 1% of the time. I'm going to say that again. A stock 1% of the time, guys, will have momentum so hard in one direction and then reverse and go in the opposite direction. More than likely, it'll come down, but it's going to stair step up. So stop counter trending if it only happens 1% of the time. We ain't that good at catching 1% of the moves. I'd rather try to catch 99% of the moves than one. And then even if I catch that one, am I really even making that much money? So I stopped using them. It's all about numbers and statistics to me. I used to be, when you come into this market, you immediately feel like I want to buy low, sell high. So teachers, investors that are out there, especially the ones that want to take advantage of you, they're going to teach you Bollinger Bands from the start because naturally we all want to buy low and sell high, right? So it feeds into our own beliefs and how we think stocks move, and stocks don't move like that. I don't care what stock we look at, guys. 90% of the time it's trending from the bottom left of your screen to the top right. Nothing is stopping the momentum. Yet, you guys are using counter trending tools to stop a momentum that's been happening for 15, 20 years. You can't stop that momentum. So why do it? So I try to train people into stop doing that. I used to do the same thing, and that's why I wasn't profitable. Then I stopped doing it, and I said, man, once I started moving towards momentum and using moving averages, I was like, my whole world changed because now the sky is the limit. It's limitless to how much money I can make versus maybe you get a reversal. Now, I'm going to be honest with you. If you want to counter trend the market, and these are just my opinions today because it's my live, the best trending indicator ever created in the history of mankind, Bollinger Bands is the worst. This is the anti-Bollinger Band. Is the VIX. The VIX is the only tool I've ever seen that counter trends the market. In fact, it's so great, guys, I made a chart for you. What do you guys notice in this chart? This is what the market spends most of its time doing. I want to show you guys something. The stock market spends 90% of its time with a volatility index that's under 16. I want you guys to think about this. Think about what I'm about to say. 90% of the time, the market is at or near its all-time highs. 90% of the time. I know it feels like it's not. In these moves to the upside, I want to show you guys something. These were the best times to counter trend the market. Remember, counter trending the market is not something that happens all the time. It's rare. Not only is it rare, you can only really catch the bottom of the market every 18 months. I've already done the numbers. Every 18 months, you're going to get a low in the market. Every 2 years, you're going to get what they call is a semi-generational low. From 2006 all the way until now, there has only been, you can see in your chart, 1, 2, 3, 4, 5, 6, 7, 8, 9 times the volatility index jumped above 50. When that happened, you were able to catch just about any stock you wanted to at the lows. That's how you counter trend the market. But you got to be patient. You got to wait 18 to 24 months. You know why? Because the market is trending to the upside the whole time. For 18 months, the market's going straight up. Then it'll come down. Then for 18 months, it'll go up. And then it'll come down. And a lot of you guys are doing the opposite, which is why you're not making any money. You're not going with the flow of the market. Unless, again, you are an advanced trader and you know what you're doing. Talking to my newbies out there, not just super traders that are out there. You know, you got your super traders out there that win 150% of the time. I'm like, how you win 150%? I win 200% of the time. Wow, you're defying physics. The volatility index is something that you guys can pull up on your charts. It's called the VIX. When you look at the VIX, it only hit 50 9 times in the last 20 years. If you bought the market when the VIX went over 50, you caught the lows of the market every single solitary time. Not only are you going to catch the lows of the market, guys, do y'all know that I caught the last three VIXs that went over 50? I caught the lows the day the market turned. Almost an hour. By looking at a value, when that VIX gets over 50, that means a nuclear is pretty much the nuclear bomb for the stock market. When that nuclear bomb is set, that means that's it. Whatever selling that was going to happen has happened. Sometimes, and it's like a nuclear war, right? If a nuclear war came and hit us, we're not going to be able to build in the next day. It's going to obliterate everything, and then you got to start from scratch and rebuild. Every single one of these times were rebuilding periods in the market, and you were able to make fortunes. But you gotta be patient. It hit 50 last April. I tried to get y'all into the market. I begged y'all to get into the market last April. Y'all didn't believe it. Trump's gonna send the country into whatever. It hit 50. It hit 50 August the year prior to that. No, my fault. It hit April last year and then August the previous year. I caught both of them. Both of them. All right. Very, very important. We haven't talked about the VIX in a minute. All right. So, Schwab, SoFi, my bad. You wanted to look at SoFi like 2 hours ago. Joel, I gave you SoFi 3 minutes into your live. My bad. My bad. It's Monday. I'm hyped. Y'all know I got triggers. Bollinger Band is a trigger for me. It's a trigger. Y'all know it. I got like 3 triggers. That's one of them. All right, SoFi, it's coming down in price, but look, it's coming down to this trend line. If you don't know what SoFi is, what are you going to do? You're going to go to your GPT. You're going to ask it, what is SoFi? It's going to tell you that it's a fintech company. A fintech company is a finance tech bank. Fintech. You're going to hear this is a new word that we're using. It's not new, but it's new for you guys. Fintech. It's like Bank of America meets E-Trade. Fintech companies are right there in between. Your Robinhood fintech company, SoFi fintech company. What's some other good fintech companies that are out there? You got SoFi, you got Webull, you got Block, PayPal. PayPal's a fintech. PayPal, Block, which is the Cash App, SoFi. These are all fintech companies. Why do I love this one? Very small market cap. It has room to grow, people. It has room to grow. Look at the week chart. The week chart, the 200-week moving average is angled up. What do I love about this also? I don't care too much when a stock gets overbought because FOMO, in my opinion, is stronger than when you guys are panic selling. But it did sell off near this yellow brick road. So the relative strength index is going off right now. So if you were using the what would Joel do method, in the comment section, if you were using the what would Joel do method and we broke this trend, what day are you in this trend? Put it in the comment section. What day? What day are you in this trend? Well, not day, I'm sorry. Like, what candle? 3. You're 3 candles into this trend. Really 2. 2 people, 2. 2 green candles, but we'll go with 3. If you're in this trend within the first 3 or 4 candles, I will not bite your head off. I promise you I won't. Don't come to me after it's been trending for 5-6 days. You can get lucky. I get it. You can get lucky like right here. Right here, the trend started to go down. And you know, you could have gotten in 3, but somebody would have gotten in somewhere down here and you still would have made money. Every now and then you get lucky. The train be like, hurry up, you better get on this train. I like to be in early, the first 3. I don't really like getting in 8th or 9th. The risk to reward is not there for me. If I was looking at a day chart, it's going to change. This is different. These are days. So if I was trading and I was doing 7, 14-day, 21-day options, I am not trying to get in this thing 1, 2, 3, 4, 5, 6, 7, 8, 9. You 13 candles in. No way. You gonna get Joel to buy this on another 14-day call option. You late. You. Why you can't make money? Y'all trying to do this. You trying to be the person to buy it right here. That's what you trying to do. Y'all see that move right there? This is what y'all trying to do with Bollinger Bands. You want to be the person that buys it right here. Let the momentum start, guys. I don't want to make fun of you guys because I used to do the same thing you were doing. But y'all want to be this person and this person. You want to reverse it perfectly with the best price that anyone has ever seen. You want to buy it right there in short. I used to want to be that person too. But what, so you can make money for what, a day? Okay, you caught it. You was up for a day. When you got all these days to make money to the upside. Like, why? I just don't, I get it. I used to do the same thing. Y'all want to be this person. But you thought you were that person on this day, and then you thought you was that person on this day, and then you thought you was that person on this day. In fact, let's throw a Bollinger Band on this bad boy. I want to see if it worked. I still have them saved here just to make fun of it. Let's see if the Bollinger Band stopped this move. Nope. Hold up. It finally stopped it after about 5 days. 1 day, 2 days, 3 days, 4 days. For you Bollinger Band users, why don't you just do this? Like, why do I need a Bollinger Band when I can just throw a trend line on there? And then when we break the trend line, I can just buy it short when we break the trend line. And then make all of this money to the downside. No, Joel, I want a short right here. And then 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 I want to, well, it did go down here. It worked right here. But then it hit the Bollinger Band right here, right here, right here, right here. Then it hit it right here. But Joel, I got my own values. I use my own values, Joel. I don't use your values. I'm like, you realize all you had to do is this. All you had to do is put a trend line on it, and you didn't have to try to time it. When it broke the trend, you could have just bought it here and immediately started making money. Look, you could have immediately started making money. Look, guys, when it hit the Bollinger Band, you didn't know how high it was going to go. Just wait until it breaks and start going through the trend line, and then you can get in. Oh, it's really stopping it right here. The Bollinger Band is really stopping it right here. Look at this. Look at this nonsense. I'm going to buy it here, long and long and long and long and long, and I'm going to buy it long here, and then I'm going to buy it long here, and then I'm going to buy it long here. And it just kept going down. Eventually, it's going to reverse. It's going to look like it's working. It does not work. It's just riding that trend line. Look, it's riding this Bollinger Band like it ain't even there. So why even put it on my chart? Because now if I was short, the Bollinger Band is making me think it's about the reverse. So I missed this whole short, thinking it's about the reverse, finally right here. When all I had to do was throw a trend line on it without the Bollinger Band. I could have just thrown a trend line on it. And when it breaks through all of that nonsense, then it would have gone to the upside. But instead, you guys are trying to reverse this move. And it never works. I make fun of it because I want y'all to make money. I really do. I ain't met nobody that made money using this. And the people that say they do, they won't show me their receipts. I'm like, cool, show me your receipts. Show me your last 10 trades. That's nonsense, Joel. If you don't want to believe what I'm doing, then we're just not cool. I'm like, show me. Show me the money. Show me how it works. Show me what you're working with. You're just not not using the right time frame. I'm like, okay, cool. I'm going to pull up a 5-minute chart. And I pull up a 5-minute chart and I say, all right, you want to use a 5-minute? Yeah, you got to use an intraday. I'm like, okay, cool. You're using an intraday. Let's pull up a 5-minute chart. Let's see if it works now. All right, cool. 5-minute chart. It's going to work now, right? It's going to work now, right? Tell me, when is it going to work? All it's doing, guys, is putting a blob around your candles. All it's doing is putting you in a nice little cocoon. A nice little cocoon to make you feel all nice and comfy. As it goes up and down, they don't work. Show me when it works. There it goes. It worked right there. All you had to do was throw a trend line. I didn't need a Bollinger Band to know that this trend broke. I used to be like y'all. Unprofitable, using Bollinger Bands. Mad, blowing up accounts. Look, I done pissed everybody off that used Bollinger. My numbers went from 130 to 90. I guess a quarter of the room was using Bollinger Bands. My bad. I just like making money. Them shits is horrible. It's the worst thing I've ever seen created, and it sucks you guys in. It sucks you in. Y'all believe in them. You guys take these $50,000 classes where they try to teach you this nonsense. And because you spent so much money, you're like, no, I gotta get my money out of it because this is my whole basis of everything I learned is based off of these. Throw that joint in the trash and let's move on to things that work. All right. So we're in our trading portion of the live. Let's talk about day trading. All right. Let's look for millionaire challenge trades. Here's the ES. Tell me when it works. There you go. It worked right there, Joe. Guys, that was 350. I waited all day long for the Bollinger Band to work, and then it finally worked at 350. 10 minutes before the market closed. All right, I'm taking this crap off my chart before I get the disease of not making money. The most unprofitable indicator ever created. All right. Now, the market was choppy jalopy today. I hardly saw anyone make money today. It was choppy jalopy. Not only was it choppy jalopy, we stayed within the 5-minute, you can even say the 15-minute. We stayed within the first 15-minute range, guys, for the first 3 hours of the market. You talking about watching paint dry? It was awful. It was awful trading the market today. Awful. And I understand why. We got a lot of earnings reports that's coming out this week. You got the Fab Five. All of them are releasing earnings this week. So everybody, we just had a massive run in the market. Everyone woke up today basically like, let's chill. So if you're a scalper and you only stay in trades for 5 minutes, you had a field day today. You're like, I don't know what you're talking about, Joel. I made $2,000 today. I got in, made $50, $50, $50, $50, $50, $50, $50, $50, $50, $50, $50. I don't trade that way. Joel, I made $50 27 times today. Guys, anytime you stay within a range, the VWAP is smack dab in the middle of a range that lasted 3 hours. We could not break out of this range for 3 hours. We didn't start breaking out of the range until 1 o'clock. By then, I was long gone to the golf course. I was like, man, get me out of here. Get me out of this house. So what some of the best day traders on the planet do, if you're a day trader, you watch that S&P 500, the very first 15 minutes that the market opens. Oh, we're looking at a 15-minute chart? That's my bad. Yeah, this first candle right here is the 15-minute candle. I use a 5-minute candle for a breakout of the range. That's why I was going crazy. It wouldn't even break out of the 5-minute range. I use a 5-minute range. Professionals are going to use a 15-minute range. They will not trade until they break out of this range. That means you have to get a candle that closes at least 2 or 3 candles outside this range. We got that right around 1 o'clock. I was on like the 3rd hole by then, listening to CNBC. Now, if you were trading the way that I trade, you would have been a little late getting into that trade, because if we went down in price, we're using the VWAP Remember, no matter what chart we look at, I'm going to use a moving average as my bias. Don't matter what chart we look at. So if I'm day trading, I'm going to use the VWAP. Now, the VWAP, guys, doesn't change no matter what chart you look at. So I can pull up an hour chart, 15, 1 minute, 5 minute. If I have the VWAP, which is the volume weighted average price, if I pull up the VWAP on my chart, it's that white line you see. Professionals use this because that white line is volume weighted. That means where was the most volume at what price? And it's an average of it, right? So that's why it's called the VWAP, volume weighted average price. If you're above it, it's supposed to be bullish. If it's angled sideways to up and you start breaking above the VWAP, you can kind of ride this trend. So what a lot of traders will do is if they got in early or late, they're going to try to get in on this trend line and try to hold this trend as long as you possibly can. All right? Because at some point, you're going to come back to the VWAP. So the VWAP acts like a gravitational pull. You can get away from it if there's a lot of buying, so you want to see volume pick up. So if volume picks up on this chart, and you can see volume right here. If volume starts to pick up to the upside, and as you can see here, volume started to pick up. Once the volume started to pick up, guys, and we started breaking out of the range, it was an easy move to the upside because we couldn't get volume to do nothing. It started to increase at 12 o'clock also, but if you notice, volume did try to increase, but we couldn't break out. You see how you had 1 candle, 2 candles? These 2 candles close outside of the range. But this 3rd candle went right back in it. And the range, guys, is in between these blue lines within the first 15 minutes. No one really likes to trade within that range. We stayed within that range all day. If we stay within that range all day, there's no way Joel's going to be in it. Now, you can try to jump it. So what I do, guys, is let's say we went to the bottom of the range, and then we start to go up. I'm going to erase all of my trend lines so that you guys can see what I'm doing. Let's say we get to the bottom of that range. I'm going to draw a trend line because this is my favorite move right here. Bam. That's my favorite move on every chart. That's my favorite move. It's like, You remember back in the day when you would be talking to somebody and you would disrespect them by throwing your hand up in their face like that? That's what I do with this. Like, If it breaks through that trend line and we start to go green, you can try to jump it and see if you can get out and see if you can break to the top of the range and try to get out of that range. You could have tried to do it here. So even if you tried it here, it's got to be a fast trade. So let's say you were here and it started to break down and you got about 3 red candles. Everyone knows that I will try to short it somewhere in here to the downside, and it would have gone down about 5 points and then came right back up and break even. So that's why I broke even today on the short that I was in. Then, if you had tried to go long, you would have done the same thing. It broke the trend. We got 3 candles. I do this on every chart. It don't matter if it's a 15-minute, hour, day, month. Same strategy, different chart. Different strategy, kind of, because we're intraday trading, right? We break out. We go from the bottom of the range to the middle of the range to the VWAP, and we try to break out of it. So I'm trying to get in this early. I want to be in 3 to 4 candles in, guys. I ain't playing around way up here. Because once you get up here, it starts getting choppy jalopy, or you go sideways. You see how you went sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles? This is a 5-minute chart, so 12 candles for 5 minutes is 12, 24, 36, 48. That's an hour. We went sideways for an hour. That would drive me crazy. Seeing your P&L go up to the red, P&L go up, go to the red, P&L go up, go to the red. That's why you got to get in early right here. Because once it goes, you're just sitting in green. And then you can just pull your stop to break even if you want to. And then if you get lucky and it starts trending out of that range, you can take advantage of it. Okay? All right. So let's see if we see any of your others. So hold up. I'm going to go to the questions to you guys. Oh, Nick J, my bad. Now, the 3 candle rule is up to you. If you guys know, y'all know how I am when it comes to the 3 candles. When it comes to the 3 candles, I'm not even getting in. I have to teach you guys the 3 candles. Because I'm a great trader, I'm trying to get in on the 3rd candle. So I'm watching the 3rd candle. I don't want to teach you guys this. I'm watching the 3rd candle and watching the time. So like right about 30 seconds into that 3rd candle, I start trying to get in position. So I'm in on the 3rd candle before the 4th candle starts forming. So I'm watching the first 2 candles and I'm watching the first 2 volume candles. All right. Now, I'm going to be honest with you. I wouldn't have liked those 2, but I did like these 2 volume candles. These 2 volume candles pushed it up. Then we got low volume. Then the volume started to increase. That's letting me know, okay, there's buying that's starting to happen. I'm not going to do that if the volume is low or if the volume is going down like this. The volume was going down here. So even on this short here, the volume did increase. Even on this short right here, you see how the volume picked up big time? See how the volume picked up right here? Started to pick up. I'm trying to be in on that 3rd candle. I would have been up about 5 points. I would have brought my stop to break even, and then I would have been out. Then I would have been long. But right around 12 o'clock, y'all know me, come 12 o'clock, if I don't see a trade, I'm outie 5 on to the golf course. Bye-bye. No trade for me. Now, there was a couple of trades. Let's talk about the Millionaire Challenge trade of the day. So I told everybody that there may be a trade on Poet today. And it wasn't to the upside. Now, why did I want to take a trade? Now, we're about to talk about the Millionaire Challenge trade. The Millionaire Challenge trade, the rules are as follows. If you're going to take the Millionaire Challenge trade, and you guys are lucky, my wife is out of town. That means I can stay out and play. The Millionaire Challenge trade requires 3 rules. When I'm taking the Millionaire Challenge trade, A, I am robbing the market. I'm robbing it. I'm robbing the market blind. That means I want to get in and out of the market the same day. This is not an overnight trade. In fact, it usually doesn't last no more than an hour. I'm trying to rob the market. 2, it can't be a stock that you pick. It has to be a buzz-worthy stock. That means they have to be talking about it on TV. And you got to see it in the ticker tape going across. Maybe the CEO is talking. Everybody's talking about that stock today. It has to be a buzzworthy stock. It can't be Tesla because you picked it and you want to trade it today. 3, it has to have unusual options activity. It can't be a strike you picked because you felt like that's the strike it was going to go to because you just learned support and resistance and you're drawing lines and you're thinking that's where it's going to go. Nope. You are robbing the market. They have already told you where the money is. You know where the money in the safe is. You're robbing the market. And you're robbing it because somebody is out there talking all this crap about how much money they got in their bank. I'm robbing them blind. So Poet was down 45%. There's no way no one was going to be talking about Poet today because it was down 45%. Now, what sucks, guys, is this usually works all the time. Today, it actually didn't work the way that it normally works, which was surprising to me. It did start to work later in the day, and I'm going to show you guys where. Now, I'm looking for unusual options activity. Now, here's the thing. Even though it's down 45%, guys, that doesn't mean that I'm shorting it. Remember, they're going to tell me where the bank is. They're telling me where the money is. I don't know where, until they tell me where the money is, I don't care where it is. I might think it's in the safe. I might think it's over here or over there. The market's going to tell you where the money is. So I'm going to go into the options market. And I think that's what the problem was. The company's not that big. This works the best when you're dealing with companies that are very large in market cap. So it didn't really work today. And I was kind of upset because this should have paid out a lot of money. Now, I'm going to show you guys the safe. So at 9:33 every morning, you're going to get the volume for the strikes on whatever option you're thinking about buying. Why they wait until 9:33 to show it, I don't know. But at 9:33, you'll see the volume pop up. More than likely, these strikes that I'm about to show you, they didn't have this number, but I'm pretty sure early that morning, these were the strikes that were being bought the most. So if you look down my chin, you're going to see some numbers. I want you guys to tell me the largest number that you see, or the 2 largest numbers that you see. The answer is 29. Okay, just so we all on the same page. Everyone sees 29,000, followed by another strike that has 21,000. Now, guys, this is the mistake all of you guys make. Every single one of y'all make this mistake. Y'all see the strike, immediately go out there, try to buy it. Or you see the strike, and then you don't look and see where the price is right now. This is a key piece. If the stock has already hit that strike that morning, that trade is over. That means if I wake up, let's just go through the example. Let's say I wake up, I see the strike that everybody's buying on the put side. The number is the $6 strike and the $8 strike. Listen to what I'm saying. The $6 strike and the $8 strike is what everybody is buying. If I wake up and at 9:35 I see 6 and 8 and I look at the price that we are at that moment, at 9:30, guys, at 9:35, do y'all know what the price was? It was $9.49. Can we take this put? If we wake up, it wasn't $9.49, it was $9.49. My bad. Can I take this put at 9:40? Hold up. Oh. Look, I didn't confuse myself because the price and the time was the same thing. Hold on. I'm just going to put 950 not to confuse myself. All right. Why is the semicolon popping up? Hold on. Maybe. Oh. Yeah, why is the semicolon there? I didn't put that. Oh, I see. Because it's in the text. Can I take this trade? The answer is yes. Because we haven't dropped to $8 yet. You better get in, and you better get in quick. So you can buy the $8 or the $6 strike. But here's the thing also. I like the trade. Listen, if I'm going to buy a put, 50% of y'all are about to get confused. So just accept that you're about to get confused. All right. We're betting on this going down in price. That's why you can buy an $8 strike, because you're betting on this dropping from $9.49 to $8, because everybody and their mama was buying the $8 strike. They were betting that this was going to drop another $1.49. But I'm going to pull up the chart for it, okay? When I pull up the chart for the for the $8 strike, what's going to confuse you guys is that you're going to see the chart going up. You want the chart to go up because you're buying a put, so what you're looking at is the strike price, and you want it to go up because that's your money that you're making. All right? Some of you guys are going to get this. Some of you guys, it's going to take a week before it finally sets in, and you're going to be like, oh my God, why didn't I? Now it makes a bunch of sense. 50% of y'all gonna get confused, and that's fine. It's when you even talk about betting on things going down and making money, the brain just doesn't want to compute. It's like, It's like converting people from Bollinger Bands to how everybody actually trades the market. It's hard to do it. You could have bought this at 9:30 if you wanted to. I always tell people wait until it goes down first. And then as soon as it breaks this trend and it starts to go up in value, buy it. So you could have bought this for $50. You could have bought this for $47 a contract. It was a fast trade though. So if you had bought this strike, the $8 strike, you could have bought this for $47 and it rose to $99. Now, I know you guys are like, Joel, why are you mad? And it rose 100%. Isn't that what the Millionaire Challenge trade is? Isn't it when you take something, an investment, and you rob the market and you make 100% return or more? I'm like, yeah, but we're so used to doing this, we wanted more. I thought this bad boy was going to be up like 500,000. I thought this was going to be 1,000% return today. I was mad when I only saw 100% return. I was like, 100%? The stock is down 47%. We can't get it to move or fluctuate another 10%? Nope. That bad boy went from 50 to 99, and then that was it. I think it gave you another run. You could have bought it down here for 50, 80. Yeah, it didn't really do anything. You had to really catch it early. So did the Millionaire Challenge trade work? Yes. It worked. You made 100% return. What is 100%, guys, when you double your investment? I invest $47. It's now worth double that plus some, $94 or higher. Could you have sold it? Yes. You can get out. I don't want to say you can get out anytime you want to, but when you see 20,000 contracts being bought at a certain strike, you're going to be able to get out at whatever the price is at that time, which is why we're going for the ones with the highest volume. I don't even know what the stock did. Did the stock even reach $8? Let's see. Yeah, because it's at $7.95 right now. You don't make money because it hits the $8 strike, guys. I know a lot of you guys think that you have to make money. No, the delta tells you how much you make per dollar move. But once it does hit $8, you need to start scaling out of that trade. The trade is over once it hits 8. And what I see a lot of you guys doing is you'll find out about the $8 strike at 11 o'clock. The trade was over at 10. It was on to the next stock. And I even was trying to maybe take a shot at it. I decided not to. But, you know, you got a nice little rip right here, which probably, I think it paid out 80%. But the move was here. I thought it was going to move more than that. It didn't. So what? So on to the next stock. All right. So let's look at NVIDIA. NVIDIA was in the news too. Let's say you wanted to take the same trade. Let's go through the process. Let's say you wanted to trade this in pure stock. Going by my charts. If you wanted to trade NVIDIA this morning, I get why you want it to be long at 9:30. But what are you noticing within the first 15 minutes, guys? You gotta start writing, you gotta start putting a box around the first at least 5 minutes. If you want to do what the professionals do, they put a box around the highest price and the lowest price for the first 15 minutes. Don't trade until we break out of it, above it, or break below it. And you got to make sure when you're day trading that there's enough room for it to move. You got to check the ATR. For you guys that don't know what the ATR is, somebody put it in the in the comment section. What is the average? I mean, what does ATR stand for? And why is it important? Professional traders are looking at the ATR and they're looking at the VWAP. That's what they're looking at, guys. They're looking at the ATR. This is what professional traders are doing, and they're looking at the VWAP. We have the VWAP on our page already, so we don't have to look for it. We see it. We sat at the VWAP the whole time. That's that white line. But you also need to look at the average true range. What the heck is the average true range? It's the average move a stock moves on a daily basis. So the ATR of NVIDIA, guys, is... the average move of NVIDIA is $5.74. NVIDIA on average moves $5.74 a day. I'm gonna be honest with you guys, y'all ain't that good where you can pull $5 off. I bet you Bollinger Band users think you are. I can pull off $5, Joel. Just give me a Bollinger Band. You can't. But you can probably pull off a third of that. Maybe even half. So when I see the ATR of 574, I cut that in half, which is about 3. So you can probably get about $1.50 or a $2 move if you're good. So it only moves $6. So whatever direction it's going in, guys, it has to have enough room for me to make that $5.74. Now, that's the average. That means some days it overshoots 574, some days it undershoots 574. We don't know if it's going to go up $5.74 or down $5.74. But once we put this range in, I usually go to I kind of cheat a little bit. And I start my average true range, guys, from like the last hour of the day before. I usually start my ATR from back here from yesterday or Friday at between 3 and 4. So I'm going to say from 207. So in my mind, I'm not trading NVIDIA if it's higher than 207 plus 6, which is $213, because it only moves $6. If it does move more than that, I'm really taking a chance. So I want to make sure that there's enough room for me to make money in NVIDIA. So then I'm going to put in my trend line. I start seeing it go green, but it's not going up, guys. It's staying within this range. So I'm waiting and waiting and waiting. I'm going to put a trend line here, but then I'm going to check and see if I can rob the market. So I'm going to go into the options market and see if I can just straight rob it. I want to see where everybody else is buying NVIDIA. And sure enough, guys, you guys are going to tell me what strike the pick. Now watch, because a lot of you guys don't use the VWAP, y'all don't use the ATR, and you ain't using unusual options activity. I'm like, I don't know how you're making money. It's obviously luck. Because I'm cheating. I am straight cheating. So, if we want to rob the market, I want to see, first of all, NVIDIA needs to be a buzzworthy stock. I want you guys to look down. You ain't even going to believe these numbers. Look down this vault, my chinny chin chin, and tell me what is the biggest number that you see. You ain't even going to believe that number. Guys, that's how many... I want you guys to understand this, that one contract One contract of NVIDIA, guys. Oh, shoot, I deleted the wrong thing. Oh, man. My bad. I just deleted the charts. Hold on, we gotta get it back. All right, hold on. Huge mistake on my part. But it doesn't mean that I can't rectify the situation. Look at that. Look at Joel. Look at Joel fixing stuff on the fly. I used to panic when stuff like this happened. Oh my God. It's the end. Cut the live off. It's over. I made a mistake. They're going to think I'm incompetent. All right. There we go. All right. We back in business. What was I saying? Oh, 527,000. So every contract. So guys, you guys got to understand that in the options market, NVIDIA is $216 a share. I want you guys to do the math here. NVIDIA is $216 a share. Now check this out. Every contract, one contract is 100 shares. That means everybody that's buying one contract of NVIDIA is controlling $21,000. That's one contract is $21,000. Guys, it was 600,000 contracts being bought. It was 600,000 contracts being bought. You're talking about a robbery. I'm straight robbing the market. So, everybody and their mama was buying the $215 strike. Now, here's the thing. At 9:30, guys, within that range, do y'all know the range was? I'm going to give you guys the range, and this is why you should have taken this trade. The range was 207. I'm going to show y'all the range. The range was 207 and 211. Now, I know some of you guys are like, I don't understand options. Well, you about to understand this. Think about this. NVIDIA was ranging between 207 and 211, and 600,000 contracts was being bought at the $215 strike. So you're like, hold up, Joel. Let me make sure I understand what you're saying. You're saying that NVIDIA's stock was fluctuating between $207 and $211, but everybody was betting that it was going to $215. I'm like, yeah. So then why didn't we just buy it until it went to $215? I'm like, that's what we're doing. But if we've already hit 215, somebody's already robbed the market. You go into the bank and you're like, dang, there's no money here. We about to rob NVIDIA. Blind. But we gotta wait. We gotta wait and be patient until it starts to go up in price. So, if you're trading using the what would Joel do method, you can't get excited when you see that big number. You got to sit back and be patient. Like, Joel told me to just be patient. We gonna jump in, but you got to be patient. You got to sit back and wait to rob the bank. You can't just roll in there and rob the bank just because. You see the cop leaving. You see another cop leaving, and it looks like it's a lunch break. It's time to rob the market. So all you're going to do is you're going to sit back and watch that strike. Now, what I'm doing right now is something I was taught years ago that most of you guys don't know how to do. I am charting the option. That means we're looking at the actual strike. I don't even need to look at the stop no more. I pull up the option and I just sit back and watch it, guys. And all I'm doing is waiting until everybody starts buying it. I just sit back and chill. Sit back and chill, sit back and chill, sit back and chill. All I'm going to do is, as this starts to go down in price, I'm going to wait until we start breaking this trend and we start going to the upside. Now, at 9:30, if you had gotten in early, it jumped from $60 to $140, which was 100% return. But here's the thing, we still ain't hit 215. So then you could have done this. If I was trading this today, guys, I'm going to tell you exactly when I would have gotten in. I would have waited until we went down in price just like this. I want to see a string of red. I want to see red, 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 red. And the only way you're going to be able to see this is with the trending indicator. And then at the minute we start going green and the volume starts picking up, I'm buying. I would have bought somewhere in this range right here. That would have been, let's just say I got the worst price possible. You would have paid $25 for this option. And you would have been chilling. Because you're like, I can lose $25. I spent that on galaxies in a room earlier. You're going to feel some type of way because it dropped from $25, guys, all the way to $13. Some of you guys would have had to get out because I'm risking 50% too. So this would have been a scary move to the downside. It would have gotten close to me stopping out because I'm going to risk 50% every trade because I'm trying to make 100% or more. And then that bad boy started to blast off. And it went from $25, guys. You're not going to believe this number. You're not going to believe this number when I show it to you. You're going to think we lying. You're going to be like, Joe, you're lying, bro. People ain't make money. You didn't create a strategy where people can make this type of money. I'm like, yes, I did. I created one of the best strategies ever created in the history of mankind. And you're lucky enough to see it for free. Hold up, I'm trying to pull up. I'm going to change this to a 15-minute chart so you guys can see it. You're going to wait, and it was scary. This $25, guys, you are not going to believe this. It went from $25 to $450. It went from $25, guys. You talking about robbing a bank. 25. Oh, wait. I'm wrong. That's after hours. That's after hours. Hold up. That's after hours. We ain't holding it after hours. Oh, no. That's it. No, I'm sorry. I'm right. That's not after hours. It went from $25, guys, to $450. That means you could have taken $250, guys, and made $4,200 in the largest company on the planet, buying the strike that everybody and their mama was buying. All because you were in this room and you got the strategy for free. If you say anything negative about me, karma's gonna get you. Nvidia, Twisted Philly. Nvidia, the largest company on the planet. You don't have to buy penny stocks, guys. Penny stocks are for losers. Ain't no penny stock going from $25 to $450 in a couple of hours. You're seeing it with your own eyes. This is not an illusion. We show Millionaire Challenge trades every day. There's opportunity every day. I thought Poet was going to do this. I had my mind on the wrong stuff. And here's what's crazy, guys. Poet still gave you 100% return. They're like, Joel, Cass was like, that was a loser trade, Joel. I only doubled my money. I doubled my money. Poet was horrible. You're right. When you see Nvidia go from 25 to 450, but yet y'all out here trading these companies that nobody knows about, that there's no volume in. There's no volume. Nobody knows about the stock because you think that you have to know something that nobody else doesn't know. I'm showing you what to look for that nobody knows about. It's called unusual options activity in the best stocks that are out there. And we scan them all the time. Now, here's the thing. I'm trying to create one of the best groups here on TikTok where I'm not the only one looking for these trades. All right. And the more people that we can get into that group chat, and yes, I'm going to get paid off of it. So just say Joel is going to get paid. Joel created the strategy. Joel gets to get paid off the room. So I have a group chat that's set up for super fans. So if you become a super fan and you go into that group chat, we are always running off trades like this in the room. If you don't believe me, ask the people in the comment section, because they ain't getting paid off the group chat. They're getting paid off of the trades. They're like, Joel, I'll pay that $10 like it's nothing. I'm not the only one. Guys, I called out only 100% trade today. That was like 4 or 5 trades the people in the room called off. I told y'all I'm not the best at doing this. I just created the strategy. I'm not the best at knowing which one is gonna move that day. I try to figure out which one, but I can't watch 7 or 8 stocks at one time. Sometimes you get lucky and you're trading the one that's gonna grow this much. But here's what's crazy. If you're trading a buzzworthy stock and you're doing it the way that we're doing it, 50% to 100% is like nothing. It's like, I told you, Poet was a disaster. And it went up 100%. It was a disaster. And I say it's a disaster because a disaster is when you're not waiting for it to pull back, it breaks the trend line, and you get in. Because I know that you guys are not doing that. So I'm going to call it a disaster because I know you guys are not going through the whole thing. You guys are buying it at 9:30 and then going to work. Or you're seeing us talk about it and then you're buying it. You're not waiting for it to drop in price, and then when it breaks that trend, you're not using a trending indicator on it. You're not searching to see if it hit that strike that day. So when it's not a disaster like this one, you could have just bought it any time during the day and made a gazillion dollars. It's a disaster when I can look at the chart and be like, some people lost on this trade today because they didn't do the right thing. They didn't have the patience of waiting for it to fall and then go up. And it doesn't have to fall with all the red, guys. It could just fall and just break that trend line. It just has to go down at some point. It has to go down and then it has to break that trend. When it breaks that trend, the very first candle I see this green, I'm jumping in. A lot of the times they will run, the time periods that they will run is 9:35 to 11. every now and then you'll see them reverse at 10:30, the 10:30 reversal. I think this one started to run. When did this one start running? Yeah, this one did a 10:30 reversal, guys. 10:30 reversal is real. Right around 10:30, after the market decided what it wanted to do, everybody knew to buy NVIDIA. You had a whole hour to find this unusual options activity. And it's crazy because all you had to do was just pull up NVIDIA's options chart and it was there sticking out like a sore thumb. Was there any other ones, guys, in the, was there any other, let's look and see what the SMH did. Well, the SMH was down, so I'm not going to pick that one. Was there any other ones that you guys saw? I put out there Poet, and which ones did I put in the room? I put 3 to look at. It was SMH. What was it? SoFi? Was it SoFi? Somebody go back to the group chat and look and see what I put. I put out 3 this morning. ARM? Okay, let's look at ARM. Let's see if ARM played up. I didn't even look to see. All right, so let's see what ARM did. So ARM dropped. So we were looking for, well, we don't know what to look for yet. So this is what happened when ARM opened this morning. I put out to watch Poet, ARM, and then there was a third one. So let's go through the process. Let's say it's 9:30. You're looking at those 3, and then you put a box around ARM. So you put a box around here. That's the first 5 minutes. It started to break out of the first 5 minutes immediately. So that immediately looked like a short. There better be a whole bunch of puts being bought to the downside. So once again, guys, you're not going to see 600,000. And I'm going to be honest with you, I probably wouldn't have taken this trade. We're going to see if it worked out. I wouldn't have taken this trade because there's more calls being bought at the 220 strike than there was puts being bought. When I take a trade like this, it's overwhelmingly being bought on one side. Like there's no question that everybody was buying calls on NVIDIA. It was like everybody's buying calls today. And no, I am not holding it overnight, even if it hasn't hit the strike. Guys, you're robbing the bank. You're getting in and out. You're not holding these overnight. That is not the Millionaire Challenge trade. So if you were to take this trade, to the upside, we would have been buying the 220 strike. At the time, that doesn't make any sense because, okay, so we would have known to buy shorts. I'm gonna show you guys why. ARM open. This is super important, people, because this is where y'all be messing up. And then y'all just be messing up when you do this. The 9:30 candle, we opened at $224 a share. If I look up and everybody and all the strikes on the call side is at the 220 strike, in the comment section, should I be buying calls? Answer that question for me. If the most volume is at the 220 strike and we open at 224, should I be buying calls on ARM? The answer is no. Because we already hit 220. I want to trade a value we haven't gone to today. If I was buying a put and I saw the 220 strike and we opened at 224, you can take that trade, but not a call. The 220 is lower than where we opened at. Do not take the trade. We already hit 220. That trade is over. The only trade that was available was to the downside on ARM. I would not have taken it because there was more options being bought on the call side. However, I'm going to check to see if it paid out. So, I'm going to take a picture. I always let you guys pick it so y'all don't think I just be coming in here and just creating stuff and making it look like it works. All right. So, again, you guys are going to tell me which strike has the most. Y'all going to have me up to 10 o'clock tonight. Wifey ain't at home. Y'all love these days. Wifey ain't at home. Joel will teach for 7 hours. Poor Joel. He don't have nothing to do but look at charts and make money. Poor Joel. He should be watching Power, watching one of them shoot 'em up shows that he can't watch when everybody else is around. Maybe some P-Valley. Nobody's around? P-Valley. That's actually the name of a show, guys. All right. What is the most volume that you guys see? Is that it? Oh, yeah, 1935. Thank you, Caffrey. 1935. I don't know if it paid out, but we'll see. Maybe it was a dud and only paid out 200%. All right, let's see. So that strike that had that put, so now you're betting on a put. Now, here's the thing. It's a $200 strike. The one that had 1,900 contracts. If we open at 224, can you take a trade? Can you take this trade is the question. If the $200 strike is the strike that everybody and their mama is buying, can you take that strike? If we opened at $224 and you see everybody and their mama buying the $200 strike, can you buy it? The answer is yes. And here's the thing, guys. I know you're thinking, but it can't hit 200 for the day. It would have to drop even more. Guys, when FOMO kicks in, anything can happen. That's how you make fortunes. That's how you take $25 to $4.50. When it just doesn't make any sense. Again, I would not have taken this trade because A, it wasn't enough contracts, and I want to see it I want to see overwhelming buying. But we're going to see if it paid out. So I'm going to take that chart and I'm going to put it in. I'm going to put it here and let's see what happens. Let's see if we could have made any money. This would have been a trade that I would have taken and I would have been pushing it. Now, here's the thing, guys. You're going to be surprised. There are a couple of times you could have bought this. Yes, the chart is going up, even though you're betting it going down, because this is no matter what chart you look, anytime you chart an option, you always want it to go up. If you buy a call, you'll want the chart to go up. If you buy a put, you'll want the chart to go up because this is your money being made. So I want to see it go down first. It has to go down first and then break this trend. That means some people would have bought it early right here. And you could have bought this for $280. Let's see if it works out. This looks like a dud too, guys, but I'm going to show you what duds are in my world. A dud in my world is when you buy something for $280 and it goes to, Joel, it only went to $512. Joel, your trade sucks. I didn't even make 100%. It's like 87. What am I to do with that? This is a dud. And it still gave you almost 100% return. It was a dud. It didn't work out the way we thought. And you made 83%. Now, I know a lot of you guys will take 83% any day. If you want to get into that millionaire mindset, I do not feel like you should use all types of funds to trade options, guys. I want you to use the least amount of money possible to take these trades. No one should start off, if you're a newbie, there's no reason you should be starting off with 5 or 10 grand trying to run this off real quick. So let's do the numbers. Let's talk about why I created the Millionaire Challenge. I created the Millionaire Challenge, guys, because there's so many different ways that you can get to these millions. You can get there the slow way, right? If you got a 401k, you got an IRA, you're maxing out that account. You got $18,000, $19,000 going into the stock market, going into the S&P or the NASDAQ. You should get there in about 16 to 17 years, easily, in my opinion, judging by history. That's the long way. Medium, you need to start investing in yourself. That means you need to find companies like Oklo, companies like Arista Networks, companies like Netflix or whatever, SoFi, companies that can grow 10 times their value. And start deciding what type of value I want to put into these companies so that I can add a zero to it. You start off in the hundreds until you can get to 1,000. Then you start investing thousands until you add zeros and that gets to 10,000. I'm at the 10,000 point where I can put 10,000 into anything. My goal is for that 10,000 to be worth 100,000, and that's not my whole account. You should not be putting no more than, 10% of your account in any given stock. That means I have to have at least $100,000 account if I'm putting $10,000 minimum into different companies. All right. Then you work your way up to 100. So that now when I put 100 grand in something, it'll be worth $1 million. That's the second fastest way to get there. So most of us can do the long way, right? You own a house, you own life insurance, health insurance to make sure you don't lose a whole bunch of money. You try to invest in things like real estate if you can afford it. You invest in the stock market, and you can start off with $10 into the stock market. You just got to start doing it. That's the slow way. Then you can give yourself a little bit more beta. You open up another account and you buy companies, speculative companies. Maybe you have a Bitcoin account, crypto account, things that can grow a little bit faster, but they're very speculative. So you want to use 10% of your assets to do that, right? So if you got 100 grand over here in your 401k and IRA, start building your own account. But it shouldn't be no more than 10% of that. So about 10,000, or just keep growing it. But if you have the ability to start off with it, don't start off with half of your account. Build it slowly. And then you have this way. And let's do the numbers, guys, because I've done this over and over and over again. In the stock market, you should not be counting like your grandma and your mama taught you to count. In order to get to $1 million, you got to get a $50,000 a year job, and you got to save 50 grand a year. Hold up. Let's go backwards again. I gotta get $100,000 a year job. I gotta save half of that, which is 50 grand, and I gotta do that for 20 years to get to $1 million. You will never get to $1 million doing that. I mean, not never. You'll get there in 20 years, putting it in a savings account. A lot of you guys are doing that right now. And then increasing your beta by putting it into CDs, which, okay, that's cool. But if the S&P has been averaging 10% a year for the last 100 years, it was created, guys, to give you 10% moves a year on average. That's why the S&P was created, so that everyone that knows about it can average about 10% a year. That means you're gonna overperform any CD that's out there and just about all the dividend paying stocks that are out there. But yet y'all still run to them. The S&P, guys, do y'all know that the S&P every year, it's not the same companies? Y'all know that I don't know if it's the New York Stock Exchange or whoever the powers that be, they will look at the 500 companies, and the companies that are stopping the rest of the 500 companies from getting to that 10% a year average, they kick them out and add these other companies that have growth potential just so that they can maintain that 10% a year. It's not the same companies all the time. They rig it. It's a rigged system. But yet, y'all still choose to go the other direction, which is why I always curse out my money manager. I'm like, this is what you do. You need to come take a class. You need a consultation with me. They're great at money managers, wealth managers, hire them. They are good for setting up trust funds, getting you life insurance policies, great life insurance policies, setting you up in a way that you don't lose your funds. They are horrible at giving you guys beta. Horrible. Don't buy crypto. Don't buy the Mag 5 or the Magnificent 5. Stay away from the semiconductor index. What? Anyway, I told you there's certain things that trigger me, and that's one. Doing this, you can take $1,000, guys. You can have a 6-figure account in 7 trades. We just ran off 3 today. We just ran off 300% trades today. And we do this every day. I'm going to be honest with you. This is how it works. If you don't understand the strategy or what you're doing, or if you don't have the time, you're not patient enough, you're gonna blow up your account. So in order to stay away from blowing up your account, guys, when you first start doing this, I don't want you guys buying any freaking options that's more than $100 or more than something. If you can't re-up in 7 days, if you can't re-up, that means whatever amount of money that you guys are using in the options market, if on Monday you can't re-up the funds that you lost, then you are risking too much. It has to be an amount that you can re-up so that you can keep pushing yourself until you learn it. All right. Some people it's $10. Some people it's $100. Some people it's $50, $75, $1,000. Some people it's 10 grand. They're like, Joel, I got it. I can do 10 grand. Fine. When you start, guys, I want you guys to do this every morning before you trade. I want you to count differently. We're no longer counting like this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're no longer satisfied with 25% returns. You guys got to change your mindset when you're doing this. When you're doing this, a terrible trade is a 88% return. because I'm off track. I need to do this in 7 or 8 trades. I can't afford to get 88%. I need 100% or more. Why? Because if I can get my account to 1,000 and I know what I'm doing, you're only 7 trades away from a 6-figure account. 1,000 to 2,000, 2,000 to 4,000, 4,000 to 8,000, 8,000 to 16, 16,000 to 32, 32,000 to 64,000. You're 6 trades away from 50 grand. You can put away 14 grand after you get to 64. Put away 14, go buy you a nice whatever you want. Vacation, you can go to the club and ball out. Now you got 50. One more trade to 100 grand. Now, I'm going to be honest with you. When you get to that 100 grand, just like anybody, we're all human. When you hit 5 figures or 6 figures, it becomes extremely hard to get to a meal. So you're going to have to do one of 2 things. You're going to have to just start siphoning that out and just put it into investments and then start over again. Especially if you guys have significant others. Because if I get anywhere near 6 figures, I start thinking, ooh, what kind of car can I buy? Everybody got their vices. Ooh. What can I get done to the house? I've been wanting to get this. Oh, I need to renovate all the bathrooms. Or, oh, I got a nice down payment on an investment property. When you get to 5 to 6 figures, it's going to be a problem. And I'm going to be honest with you, you can't trade everything when you get to when you get into those 6-figure areas, guys. You got to trade the Nvidias, the Teslas. You can trade the SPYs. There's not enough liquidity out there that can support the amount of money that you have. But I'm just letting you guys know in advance that when you guys get to those numbers, there's going to be a lot of things that you're going to have to overcome. All right. So the best way to do it is that's when you make your first 5, if you can turn, 1,000 to 10, which really doesn't take that long. Y'all saw $25 go to $450, and we see at least 1 or 2 trades like that a week on one of the top companies. You mess around and catch that one with 2,500 in it. 2,500 would have went to 45,000. Y'all realize that, right? That trade that I showed y'all earlier, that $2,500 would have gone to 45 grand in 3 hours. This is not make believe. Yeah. You guys gotta start small first and figure out what you're doing. Ask questions. What am I looking for? Be engaged in that group, because we'll help you in the group. Because I'll have cats that are like, should I get in now? And I'm like, nah, look at what the chart's doing. Like, chill for a minute, then take the trade. Because you guys will want to jump gun it, or you're going to want to use more money than you allotted for. Start off small. And yes, maybe one day you do the 25 to 200 and then you start doing numbers. Man, if I had 25 grand, it would have turned into 200. And then you try to build, then you jump start it, put 25 grand in your account or borrow it from somebody trying to get rich quick. And you can get, like, anybody that says you can't get rich quick just ain't never got rich quick. I've seen money grow very, very fast. You can get rich very quickly in this game. And I'm not just saying this so I can get super fans. I show y'all my receipts. They're like, nah, we done seen this dude buy something and it just jumps. The question is, the people that you guys are following, do they actually have strategies? Are they actually buying the things that you're talking about? Is that just a fluke that it happened that day? We do this every day. And the people in the group chat will vouch for it. Because they see it. It seems unbelievable at first until you start seeing it every day. And it's companies like, y'all notice I never show like unknown companies. It's always the companies everybody knows about. It's always NVIDIA, Apple, MicroStrategy, MicroStrategy. If you see Bitcoin up one day, chances are that's a millionaire challenge trade. You just got to be patient when you do it. If you can't afford it, guys, or budget it, don't force it. It doesn't work when you force. When you try to force your will onto the market, it does not work. You have to have a strategy where you say, I'm starting off with this amount and this amount only. And you stick to it. This market rewards consistency, patience, and discipline. It rewards discipline. I've shown it over and over and over again. This market rewards discipline. If it drops more than 50%, I have to get out. What you gonna do once you get to 100 grand and you see it down 25 grand? You're gonna be thinking, I just lost a Honda Accord. Discipline. You got until it drops 50%. You might get all the way to 100, guys, and it drops to 50. But who cares? Let's say you go 1,000, 2, 4, 8, 16, 32, 64, and then you lose half of it, and then it goes to 32. And then you lose the next day, and it goes to 16. But then you run off 5, 16, 32, 64, 128, 256, 512. This market rewards discipline. Even when you're losing, it's funny like that. If you're disciplined enough to get out when you lose 50%, the market rewards you. It's like, oh, okay, you one of them. You one of the top 10%. I'm going to reward you with 5 straight trades that work out because you had the discipline to get out when it dropped 50. What's not discipline? Oh, no, I'm losing. I'm just going to hold this overnight. It works one time until it doesn't work again. Oh, you only lose when you hit the sell button. The worst thing I've ever heard in history. This market rewards discipline. You have a disciplined way that you approach the market, you're going to have receipt tower. You're going to have I'm almost up 4,000% on a trade I took during COVID. 4,000 in the largest company on the planet. But y'all are trying to get 4,000% returns in companies ain't nobody ever heard of. I got a 4,000% return in a company that everybody heard of. That's the difference. You don't have to go and buy and trade companies nobody's ever heard of. That's not where the money is. You're thinking like a thousandaire. You're not thinking like a millionaire. Millionaires want to be involved in trillion-dollar companies. And then you step it up and learn the options market. That's where all the rich people, that's where everybody's playing. They ain't playing in penny stocks. They're not in these Reddit rooms trying to make these moves on GameStop. Guys, they're GameStop type moves every day in the top companies. Why are y'all still trading GameStop and what else y'all was trading? What were all the meme stocks everybody was trading? AMC and Carvana. Now, Carvana, I ain't even gonna lie. Carvana, actually, let me pull up Carvana's chart. now Carvana, look, now Carvana, I might have to trade that one. Carvana be moving. Let's see what Carvana did. And then I got to get out of here. All right, I'll stay up for 20 more minutes. Then I got to go to work. See, you see how nobody was really talking about Carvana today? So you can't pull off a millionaire challenge trade. The millionaire challenge trade, if you do it right, it has to be something. It has to be a buzzworthy company that everybody is buying today. It can't be your choice. Well, it can be your choice between a couple of stocks. Like, for example, if I pull up my StockStar list and I put it in order of what stock was up the most to the bottom, I see that SanDisk was up 8%, Snap was up 7%. I'm going to trade SanDisk just because I rather trade SanDisk over Snap, and I'm going to always go with the largest company because it's so much money being exchanged when you're dealing with these larger companies. Most of you thousandaires that's trying to get there, y'all think the opposite. Y'all think I'm going to go with the smallest company, which is great when you're investing and you're trying to grow that market cap. It's terrible when you're day trading because there's not enough liquidity to get you in and out of those options. Y'all saw how there was 600,000 contracts being bought in NVIDIA. That's what I'm looking for. There's no way you can't get out of that trade. It's money just being thrown. All right. So, I would pull up something like SanDisk. Now, SanDisk is one of those companies where you can just roll in that mug just because it's a Monday. But it's going to cost you a lot, right? So let's say I was trading SanDisk and I pull up my chart. Everybody sees that it's green. I'm going to put my 5-minute box in. So I'm going to do the first 15 minutes. So I'm going to put, I'm going to put that there. You see that we were at the VWAP until we start breaking out. You could try to jump start it, but it was green the whole time. So there are a couple of ways you could have got in. You could have got into SanDisk when it broke this trend line and started to go up. You could have got into SanDisk when it started to break out of this range. You need 2 to 3 candles to break out of the range, and then it starts to go up. I'm going to go and look at the options market and see if everybody's buying it. I'm always going to go in here and cheat. I'm going to go in here and cheat every time. I started making money, guys, when I stopped being the one that picks everything. I'm not picking nothing. I'm letting the billionaires and the millionaires that's moving this market tell me what to buy. I'm no longer listening to my cousin Al or anyone that wants somebody to listen to them be right. What is this saying? So, I don't know if SanDisk worked. I just pulled it up because it was the top stock on my list. I don't even know if it worked. Remember, an 80% move in my world is a dud. 50%, I'm like, Y'all be like, I made 25% today. I'm like, okay. I'm happy for you. You got to start somewhere. But we need to start thinking 100, 200, 300, 1,000%. What's the largest number that you guys see? What is the largest number? Now, these are expensive. If you want to trade this bad boy, it's going to cost you. I do this for work. This is what I do, Alan Heiser. I'm a full-time day trader, investor, consultant, TikTok live host, realtor. Wherever the money is, that's where I am. I decided to be involved where all the money is. All the money's in the stock market. All the money's in real estate. That's where I hang out and play. All right, this option was expensive, which is probably why I wouldn't be trading. Well, you could trade this. You got to start trading these guys when you start, when your account start doubling and tripling and getting into those 5 figures. Then you can roll in here and buy 5 or 10 contracts, and it costs you $8,000 or 80,000. Now the strike that everybody was buying was the 1300. That was the 1080 strike. So if you look up and you see at 9:30, guys, at 9:30, SanDisk was not at 1080. SanDisk was at 1030. That means it has $50 more that it can make you per contract. Remember, you make $100 per dollar move. What? So if everybody's buying that strike, guess what? Joel's buying that strike. I'm no longer picking strikes because I'm looking at my resistance level. Y'all do that. I ain't doing that no more. That takes too much time. I want to see where everybody else is buying, and Joel's going to match it. I'm going to buy what the millionaires are buying. This didn't really, oh, wait. Yeah, this chart didn't really do anything. But you could have bought this this is a dud. This would have been a dud because everybody really wasn't talking about SanDisk this morning. It got spotty. You could have bought this option for about $5,500. I'm going to show y'all a dud in my world. A dud is when this goes from 5,500 to 7,600. That's a dud in my book. You can do better. But Joe, you just made $2,000 off your 5,500. That's not going to get me to my number as fast as I want it to. But you made a 50% return, great. Now I got to get there double the time. It's just numbers, guys. I need it to go 100%. That's not even 50. That mug went up 30%. I'm not satisfied with that move. I'm going to take my money, but I'm not satisfied with that. I'm like, ugh. I'm embarrassed. I'm like, oh, God, I made y'all 33%. I'm hiding my face. Okay? I'm trying to rob the market. Rob it blind. But nobody was really talking about SanDisk today. In fact, guys, semiconductor companies, even though this company is up 8% today, semiconductor companies... Oh, you guys didn't see the chart. Sorry about that. My bad. My bad. Hold on. My bad. That was the chart. This was the chart. 5,500 to 7,500. Y'all see it there? If you had 5,500, you could have made $2,000 off of that. You could have made a 50% return in the S&P 500. So anytime I make the same percent return I could have made just trading the S&P, then just trade the S&P 500. It has to be a company that everybody is talking about. That ARM trade, 100% return. Poet, it was 100% earlier and then 80%. NVIDIA, stupid. All right, you're gonna mess around and get in that one that moves that much. Especially if you're playing around in that room. The problem is, guys, you can't go all in all the time, all right? All right, you got what I mean now? I hope you did, because you guys be missing. You guys will miss one step. You'll either hold it overnight. B, you won't let it sell off first. Remember, you're using the what would Joe do method. You always want to buy things on sale. Always. If I can get it for a lower price, I'm waiting for the lower price. There's always going to be a millionaire challenge trade. Every day, there's a millionaire challenge trade. You don't have to get FOMO. We always find moves. All right, the market tells you what's moving. Even in Oklo, what time is it, 9:51? I'm just running off different things that I was putting out there. Let's say this morning, I could have done both things. Like this morning, I bought Oklo it wasn't really a company everybody was talking about, but I'm going to show you guys what happens when you trade something that no one. But I want to see if people are buying it unusually. Like at 9:30, Oklo was at $71 this morning. That's around the price that I bought it. All right, so I bought it this morning for 71 bucks. If I go into the options market and I see everyone buying like the 80 strike, oh, that's a millionaire challenge trade. That's a $9 move from where we're at right now. So I would go into Oklo. I would look to the call side to see where everybody was buying. And I see on Oklo, there was a bunch of call options being bought at 75, but then there was a bunch of puts being bought at 70. So that's my range right there, 70 and 75. So when I pulled up my charts, I would have said to myself, hold up. Everybody is buying the 75 strike, which is here, and everybody is buying the 70 strike, which is here. Well, guess what? We stayed within that range the whole day. There was no need for me to take a millionaire challenge trade. Now, what you guys will try to do is you'll try to overthink it because you're smart. So a smart person would have said, well, can't I just buy this on sale? And you're thinking, and if the strike is 75 and everybody's buying it, then chances are by Friday it's going to reach that strike price. We don't care about Friday. So then you'll try to buy it as it starts to go up right here, which you can do and you can make money. But if you're taking this trade the way that I created it, I want to make sure that we've never hit that price this whole day. That means if I take a $75 strike, guys, we better not have hit 75 already at 9:30 this morning. If we hit 75 at 9:30, that trade is over. If we never hit 75, then I'm going to take it. So then all we did was stayed within the 71. That's why I'm like, this trade would not have worked. And a lot of you guys will try to do this and make money to the strike that you see with the most volume, but you forget to go back and see if we've already hit that value. Now, will it work? Can it work? Yeah. But not the way that I intended it to be traded. I created it this way. You trade it the way you trade it. But don't call it the Millionaire Challenge trade. Call it whatever trade you're using, because that ain't the Millionaire Challenge trade. Got it? Got it. All right, I got to get out of here, guys. My throat, I'm losing power in my throat. All right, we had about 4,700 people come through today. Thank you guys for all the support. I want to give a shout out to G7, the one and only, Master Zanitas, C Spooner, Safari Don, Tim P, Zano 106, Alfred J1, and Moji and Kale coming in at number 11. I see, did I say Safari Don? Wait, hold on, let me go through it again. G7, the one and only, Master Zanitas, C Spooner, Safari Don, Tim P, Zano, Alfred J, Moji, and coming in at number 11 is Kale. All right. Uh-oh. Why did my thing go off? I guess I had a certain amount of time. All right, so, my goal. The goal just shut off on me before I could even. Anyway, thank you guys for helping me try to achieve my goal. But I guess because I went on for like 3 hours, it took the goal off. So I can't even give a shout out to the people that helped me with my first goal that I'd never even reached. But thank you guys for the support. I'm going to put on one song. And during that song, whatever Spotify picks, I want you guys to engage with each other in the comment section. And once that song is over, the live is over, and I will see you guys tomorrow at 6 o'clock p.m. Let's see what Spotify wants to play today. Brandy? That's interesting.